So I don't know where we want to start. I mean, I could just start on one, and then maybe we could just start going around the room and see what happens and just kind of go with the flow. Is that all right? Yeah. 9 different tax provisions out there that you could get some type of benefit on the educational stuff. So when we're doing the returns and you're sitting in there with your client and the kids are in college, right? You always got to look to see where those credits are going to be best be used, right? Especially this year, because now, right, in 2013, we lost if your client made too much money on the phase out, you're losing the dependent exemption again. So what we like to do is we actually analyze the returns, right? We sit down and we do where would it benefit more? Do we take the American Opportunity Credit on the parent's return, or do we take it on the child's return, right? And what you have to do is really analyze it, right? So the parent, and anybody can jump in here if they want to jump in and talk about it, if they go through this. But the parent, if they make too much money and they're phased out for the educational credits, and they're not getting any benefit for the dependent exemption, because probably they were an AMT or they hit the phase out, right? We look to shift that over, right, on that side. So what we do is we look at that and we analyze it, and we try to see if it benefits on the child's return, right? So we do it both ways. We analyze, see which way makes sense to take that credit. Now, if the parent doesn't disclaims the dependency exemption, right, the child still can't get the dependent exemption on their return, right? That's the rule. But
yeah,
they can.
They're eligible. The parent is eligible, so as long as he's eligible, he can't.
That's correct. The parents would qualify, but they would disclaim the exemption. So what we do is we disclaim the exemption. We file the child's return. Can't claim themselves as a dependent, but if they have tax liability on that return, we shift over the American Opportunity Credit to the child's return. Can't get the refundable piece, but you can get up to $1,500 of tax liability, right? Or unless they have more than tax liability, if they can have $2,500, then you could use it all against that, right? But so on the child's return, we're trying to analyze, see, does it make sense? What we always also do, I guess, during the tax planning, if we have small businesses, we try to see if there's a way to get the child on payroll, right? If we can get the child on payroll because we know the parent's going to lose the American Opportunity Credit, we try to get the child on payroll up to a certain dollar amount, and usually it's around $25,000. Now, you got to be careful. You really got to have, documentation in place. You got to have, timesheets. How much did he work? What was he getting paid an hour? You have to file all the right forms, the 941s. You got to file the W-2s. You got to do all that stuff. But if you can create some tax liability on the child's return, whether it's $1,500 or $2,500, whatever it is, and you can shift that over, you have an immediate tax savings. And that's something we do for all our clients when we're doing planning and even after the fact when, we're doing actual tax returns.
But you can make the argument if the child has a stock account, let's say, that he's not necessarily a dependent because he could support himself, and then you could get that refundable credit.
If you can say he's a dependent on that return, somehow you would have to have him qualify as a dependent.
Yeah, you better repeat the question.
Yeah. You want to repeat it? What was your question?
Well, the question was really a statement. If you can demonstrate that the child contributed more than half their own support,
right,
then they wouldn't be a dependent of someone else anyway. They wouldn't be qualified for somebody's dependent.
What he's saying is that the child has enough money to support himself, more than half the support, then they can take the dependent exemption probably on their return and probably get the full $2,500 credit. Potentially. But you got to be careful, right? You have to, and I've seen it a lot of times while the CPA is doing it, and we do it too sometimes. We'll put the child on, maybe put it through outside services or issue a 1099. You really got to issue, a W-2 if he's working for the business of the family. So you're going to do a W-2. You're going to file all the right forms. Like I said, timesheets. And the nice part about that too is if you do shift income over to the child, right, and say it's $20,000, right, and the parents are in a 40% tax bracket, or a 39.6, whatever the number is, right? They would get a deduction on their return, save $8,000, right? You shift over the 20 grand on a W-2 to the child's return, and it gets soaked up with the American Opportunity Credit, which the parents weren't getting anyway. So it's a tremendous opportunity to do that. And if it's unincorporated and the child is under 18 years old, no Social Security tax, right? No FUTA tax if you're under 21. So it really works well. And even in the S Corp, we have an incorporation that, you know, it also works well. You're going to pay the Social Security tax because it's incorporated, but you're still going to have the tax savings, and you're still going to get yourself the American Opportunity Credit. So, yes?
If you have a client who has a Schedule C and otherwise has no payroll, and want to put a child on, now when you have a Schedule C, you don't need to have workers' comp, but when you put your child on payroll, you need to have workers' compensation insurance to have your child as the only employee on payroll?
I would check with your insurance agent, but I would say yes. Yeah, I would say you probably need it at that point. And you're going to also have to register them with the state to file the forms and the 941s. You're going to need, if you don't have an ID number at that point, because a lot of Schedule Cs or disregarded entities don't need ID numbers because they don't have payroll, they don't have a profit sharing plan. So you're going to need an ID number probably to file that W-2 and do the 941s and everything else. But from a compliance standpoint, I mean, maybe it costs your client a couple $100, $500, whatever it is, to do those returns, but you could be potentially saving, you know, the Social Security tax piece, saving the tax dollars, and protecting the educational credits. So it's just a planning opportunity. A lot. We've looked at this a lot. There are rules on it and regulations that actually say you can do this. So it's something that everybody should be looking at because there are big dollars out there to save for your clients with this stuff. So that was my start. Now I want to hear from everybody else. What other issues you guys? Neil?
The weather.
Oh, the weather was horrible.
There's nothing we can do about that.
We got started off with slow forms, right? Our forms were late again as usual, the 8959, the 8960, and the weather was what? We have 3-4 snow days?
Well, if you're looking at school cancellations, I mean, the number of times that offices weren't open, that you know, states of emergency, digging yourself out, clients not getting mail, clients not wanting, you know, nobody wanted to do anything because you were so exhausted from the barrage of snowstorms.
Yep.
You just pushed everything back and it didn't help things.
No, it definitely didn't help things. And we actually had a seminar scheduled at Bourbon Chapter. You know, we had some tax season hot issues, and we got rescheduled 2 times, and we wound up having it in late February, and we wanted to lose probably 100 participants because they're already way into tax season. Right, it wasn't hot anymore. So.
But on a technical aspect, touch on it sort of with your item 3 entry, is the explosion of investment in publicly traded partnerships.
Right.
Enbridge Energy and Enterprise Products and 1OK.
I thought I was the only one.
This one. And the clients, every client I talk to, they rave about the cash flow, greatest investments in sliced bread, and I tell them that's terrific. Your tax reporting that results from this is horrific.
Yep.
And they have, and I bill them, I put in language, preparation of 2013, federal and state tax returns involving voluminous partnership reporting. I mean, I had one client went from 2 K1s to 26.
Yep.
And they have they think it's like buying Microsoft or IBM stock, that they get a quarterly check and they're clueless. The brokers sell them on these investments.
They get commissions.
And it takes a simple return that would take an hour to prepare, it becomes a 4-hour return.
Right.
The return on investment, from what I understand, is a good return on investment on it. I sat down with a client, and they had about 25 of them, and I said, your bill just went from this to this because of this.
And if you do it properly, when you have then the sales,
Oh,
Wow.
yeah, with the recapture.
to the capital gains in your brokerage accounts, I mean, it's mind-boggling.
You brought this up last year, Neil, and that's why it made it, and I think there was more this year. And I think, like you said, I think a lot of the investors or the brokers did get their clients into these oil and gas and Kinder Morgan and all these other ones, including my firm, who was an investment advisory firm, until I went to scream at them and said, don't put my clients in this because I don't want these K1s to deal with. But you're 100% right. And, you have 32 line items on the K1 that are about $32 each.
Right.
And you feel like, as a CPA, you need to do the right thing and input them on the return. Yes?
The return on investment on those K1s aren't as good as you think. If you take a look at the capital accounts, beginning and end, a lot of that money is their own money coming back and being tricked into this great rate of return.
Yeah.
So if you look at the capital account, hey, I got $5,000. Well, the capital account, went down by 4. So you made $1,000 on it. You didn't make 5. But the client thinks that they got $5,000.
Maybe. I'm not
Take a
even,
look
I
at the
mean,
capital
yeah.
accounts next time you.
Yeah, I don't-
But here's the worst part. If you get a lot of that recapture when they sell this stuff,
Mhm.
they get slammed at the 47.97.
Correct.
Ordinary gains.
Right.
Which they don't expect. And then,
Right.
and then it's, why did you do this to me?
Right. So, couple issues back to these oil and gas K1s, right? Couple things. You get a package that's this big. You get instructions that you used to have to fold them out. I think they're better now. But
Smaller font.
the font's small, and you do have probably 25 or 30 different line items, depletion, foreign taxes. The other issue is you have 8 different states. You could be in 8, 12 different states. Are you? What are you guys doing? Are you filing in those different states?
Usually two
Okay. So no. What's that?
Limited partnership. I mean, we usually don't.
No, I don't. Listen, John. From a practical standpoint, we don't either. But what if there's $3,000 or $4,000 being allocated to Alabama? Are you filing in that state?
Come get me.
Lottery.
So
Yeah.
if it's $4,000, maybe you better check. If it's a lot of them
Yeah,
like
it's a couple
$5 and $10.
There were a couple hundred, and I agree from a practical standpoint. I think we're all doing the same thing, and we're not filing the other state returns, right?
But I think they should.
Yeah.
I think the clients need to be educated on the amount of work that it takes
Yeah.
to do these. The more they get involved in them, you can have 100 of them, I don't care, but your fees are going to be reflective of that.
I agree, and I think it's the communication we got to tell our clients. When they have these K1s and you see them, you got to tell them there's going to be an extra charge, and you better put a separate line item on your bill for it, right? What's
The
up?
funny thing is, Jim, I've gone through this, and we still have to bill our clients, and our bills are that much higher. And then we get the phone calls arguing about our bills. And you mention to them, how much are you paying your broker? Because they're not paying anything out to the broker, and they normally say, oh, I hardly pay him anything. Okay, well, did you look at your quarterlies and see the fees that
Yeah.
directly
Oh,
they took
I
out of
tell
your
them that.
money,
I let them know.
and the money that comes out in fees for getting you into PPPs, which is more on a commission base than the regular management fees. And then you make them aware of the fact, hey, you paid them $20,000 to $30,000 to your broker. I'm billing you X dollars. You make them think, because you're the one that has to do all the work, where the broker just gets them into it. But
Yeah.
we get the brunt of it. We're doing
Yeah, I think you just got to communicate up front if you see that the client is going to have that situation, and just get to them early enough to tell them. I think, with these investment types you have here, you're going to have an extra couple hours of time, and this is what it's going to cost you.
Right.
And hopefully in their mind, they're saying, and I don't know, you had said the returns aren't that good, but maybe in their mind, the offset is my return is better, so it's okay to pay an extra few $100.
They're not. I mean, you take a look at them, you'll see a profit of $1,000. And then the client will get $5,000 as a return, right?
Right.
Take a look at that capital account.
Right.
The
Yeah.
client thinks that, and they don't even call it yield, they call it percentage return.
Right.
They're tricking the clients into thinking they're getting 10%.
Because they're getting the cash flow, right.
7% of the 10% is their own money coming back. Take a look at those capital accounts, you'll see.
Yeah.
The biggest job is trying to convince the client that we're not calling it, if they ever go to get rid of them, this so-called phantom income.
Right. Now, is everybody
No, that's
doing
what I
that?
was talking about.
Does everybody actually know that when there's a final K1, right, that they better look at the back,
Yes.
and figure out with with your microscope on,
Well,
you got to
it's a
read this
separate
thing, and
schedule they attach.
it's a separate schedule, but it's in minute print, right?
Wow.
You got the boxes across the bottom, and you got to figure out what your basis is and what your recapture is, right, on that particular piece. Now, I don't think the gain or loss changes. I think
Well,
it's just
character change.
the character
Yeah,
changes.
Sure.
No, you got basis.
And you also may have basis adjustments.
Yeah.
Right.
And they have an AMT adjustment too.
And there's an AMT adjustment. And what's in your 1099-B, they tell you what your basis is, but that's not, that's just to gain a loss
Right,
for.
right, right.
It's the original purchase price.
Right, exactly.
The brokerage account, the Merrill Lynch capital gain schedule, or the Smith Barney capital gain schedule, is based on your original purchase price without
Right.
the pluses and minuses over the
Right.
years.
So you
That's
have
what that back of
Right.
that table
Right,
but
detail
then-
gives you to make your adjustment.
Yep, and then when I sat there for about, had to be 10, 15 minutes. We had a negative with the negative, so you had to subtract 3 from 4. So was that negative a positive, or was the positive a negative? I mean, we sat there, 2 of us, looking at this thing.
And then the husband has to buy 50 units, and the wife has to have 25 units. It's
So-
insane.
Yeah.
They sell 13 units.
So I guess the point here is, somebody brought this up as far as engagement letter language, I don't know if it was Jim. So if there's an alternative investments involved, if you're getting involved in alternative investments, you may have additional fees associated with that from a tax preparer standpoint. So maybe, I know when we do our engagement letters, we have a short checklist at the end because nobody seems to fill out those lengthy checklists you get from the tax software. So we have just the major questions. So that probably would be a good thing to put on the short checklist. Did you invest in any alternative investments this year? This may impact your
Fees.
preparer fees. And actually, I heard today, I think, for the first time ever on CBS Radio, and I'm not getting commissioned, I think it was David Lerner Associates,
Oh, they're the worst.
and they actually said on the ad that these investments are complicated, and the last point was that it's going to complicate your tax preparation.
Oh, really?
That's a good
Actually
thing.
said on the
Yeah,
ad,
that's
I was
rare.
shocked, I'd never heard that before.
Right.
And I think that was the name of the outfit that.
David Lerner, I think they do a lot of, aren't they do a lot of reads.
They have the
Tax
Apple read.
exempt.
Yeah.
But that's a
Yeah.
proprietary product that was
Right.
proven to be
Yeah.
almost a Ponzi scheme.
Another Ponzi scheme. Okay, so the oil and gas, we know, again, and the problem with them is too, I mean, you can't put that in the letter, but a lot of times we don't know till after the fact, after the client comes in, we had staff work on it, they spent 4 more hours than they were supposed to spend on it, then you have the question, now you gotta get to the client and tell them. I mean, you gotta try to get to them before, but it doesn't, in the real world, it sometimes doesn't always happen.
Right.
But if you do have language in there, if you do have any additional investments or things, that may help you, tell the client. Yes, Gal?
No, I was just going to say that was very interesting about the return on investment. If something seems to be too good to be true, it usually is.
That's the Bernie Madoff book, Too Good to Be True.
So, I mean, that was a really good point,
That's a good book.
because every client says that to me, oh, but I get a good return, Gal. Well, I love that
Yeah.
point. And I think that's something that the society should be aware of, as an outlet, that we're, it may be a little deceptive.
Yeah, and I'll check with our investment team and see
I would love
what
to
their
know the
returns
answers.
were on those investments. Yes.
The last good point is that when you get all these new PTPs in and you think the return is done, and it's April 14th,
Right.
and then late May, early June, you're getting additional ones, and you have to go back in and do this all over again.
Yeah. Well, I drove down, yeah, and I agree, and I drove down with Norm on the way down, we were bull crapping on the way down a little bit, and same thing with the 1099Bs, right, the brokerage statements. What's that? Same thing with the brokerage statements, right? You get one, what do they do now? Some of the bigger brokerage accounts February 28th? 28. So 28.
That's always been.
And then
Right.
the 15th of March, you get the first revision.
I had a
Right.
client who, when was their broker?
April the 6th.
And then if you have government
Right.
paper, you have.
I told this woman, ask him specifically, point blank, are you gonna get a new one?
Yeah.
She asked him, he said, no. 2 days later, she got it.
I think I had 4 Morgan Stanleys. I had 4
Yeah,
Morgan
they're the
Stanleys
worst.
for the
They're
same
the worst.
time. Same account.
They're the
What
worst.
can we do about that? Like, where do we have to go? Because our season is getting more complex and shorter every year. Like, something has to give. And I don't really want to extend the season.
Oh, I don't want to
So
extend the season
It's
either.
got to go the other way. Like, they have to go back into their February 15th, January 31st
It
date.
used to be January 31st, and then some of the bigger houses got, I guess, February 15th, and somehow it got pushed back to February 28th. I think that's more of probably an AICPA issue than a local issue, but I mean, we can communicate, to them, because I know that they had worked on that. Yeah, and then the other thing is with the 1099Bs, I mean, you got 6 different things. Basis not reported, basis is reported, long-term, short-term, no basis. I mean, how long does it take you to fill out that Schedule D now? Well, it used to be say, summary schedule, see attached, can forward upon request. And we used to put the one line in, long term, one line short term, you were done. And now you could have 6, 8 different inputs, and they're very difficult to read. They're all different statements, and so it's like, again, we're doing a lot more work now. And again, I think it's just telling our clients what we're doing.
The good news is that
What I'm waiting to see is what the first CP 2000 letter that comes out with these things.
You have to go online, it's electronic.
Okay?
Yeah.
The 20 that come out.
Jim, it's just like everything else. We noticed, the clients are getting less mail. I know we have the 1099-G for the unemployment, just like a lot of 1098s for the mortgage statements are online.
Right.
So everything is becoming, more, a lot of the K-1s, you have to go online to get them
Well,
because,
we just go, all the PTPs, once we see one, we
Then
just
you-
go
you can go
online
online,
and
right.
basically take it upon ourselves to
Exactly.
extract as much information as possible. And then you'll see there'll be 5 or 10 where they bought and sold on the same
Yeah.
day, so you download a K1 that has zeros on it, put it in the file, and it never goes anywhere, so, yeah.
but it's that everything's being, less mail, more download. And the client goes, I need your 1098. I gave you everything I got in the mail. Well, did you check online? Oh, no.
And then the difficult becomes you get that amended K1 and you tell your client there's only a $32 difference and you tell them you're not going to do an amended return and you're on the phone 10 minutes trying to explain to them, well, what if I get a notice and, what do I do? And I said, just, if you get a notice, send it over, maybe a $10 tax balance. But then, you're spending 10 or 15 minutes extra now trying to explain to your client that doesn't understand this. It does become a pain in the neck. It really does.
There's also another cost factor, and that's the review of the return. You have all the extra time that's spent with the staff person preparing the return. Now the reviewer's got to review it. And then when you get those complex 1099s and those K1s, it's not an easy review.
Not an easy review.
And just as a thought, I think that our society, whether it's New Jersey or the AICPA, should be assisting us in getting out some PR out there, some news releases and things that talk about the issue of when you do alternative investments, that it creates a problem doing your tax return, and that creates additional time and costs a little bit more money to do the tax return.
Yeah.
I don't see I don't see anything ever coming out of the society, ours here or the AICPA, in terms of going out to the public and talking about how the complexities of tax returns, if they're going to be done right. Now, of course, you can just fluff them through, but if you're going to do them right, it's going to cost time.
It definitely takes more time now with all these, like I said, the 1099s and the oil and gas stuff. I mean, a tremendous amount more
It's
time.
even beyond oil and gas,
Right.
it's got everything.
It's everything. And even Norm said, like we talked about too on the way down, we do about 400 or 500 contractors. So they start early, they get W-2s, they come in, and we're starting to do their tax return. Well, did you work all year? No, I was off a month. Well, where's your 1099-G for unemployment? Well, I don't have it. So now I'm sitting in there, and I said, well, now you're going to go online. The only way to get it is go online. And they're sitting there going, well, I think my password's this. No, I think it's this. Now I'm sitting there 15 minutes trying to figure out, trying to get on the Department of Labor to try to get the 1099-G so I can finish that return. And then he goes, well, I got $100 a week. Well, I don't know if there's withholding on that $100 a week. So now it just becomes, so let me go home. Now I can't finish the return. Little does he know when he leaves, I'm hitting a button and it's, hopefully going and get processed and done. But now I got to wait for him to get back to me or her to get back to me. And I got to wait for the 1099-G and I got to make sure I get it on the return. So that was another big issue that we had in our firm this year is the unemployment compensation. I don't know if anybody hit the same thing.
If you try to assist the client, 3 shots and you got locked out.
Because I think you weren't on, I tried it, and I think because it wasn't on his computer or her computer, you couldn't do it. We got shut out.
No, it didn't matter. You 3 shots and you were out.
We got shut out. We tried calling, couldn't get on the phone. I mean, so now we were held up with a whole bunch of returns that were done other than the 1099-G, which, would have been out. So that was an issue too this year, right? Anything else? I mean, anything else you guys want to talk about?
One more last point, with regards to the broker, the other really enjoyable thing is that after we go through the 1099s, is that when these brokers get our clients into new investments, that they send us over the 200 pages on the documentation on the investments, that they send that to you to read because they don't know how to read it. Like you're going to spend, the next 3 weeks reading this one document, and now you have like 10 or 12 of them because of the turnover of the investments. It's getting out of hand.
Yeah.
Totally out of hand.
How did everybody make out with the new forms, the 8959, the 8960? Anybody actually look at the 8960 once they input this stuff into the returns? Because, again, probably the most complicated form I've seen in a long time. It's almost a separate tax return. I mean, you have a tremendous amount of input going into that. And if you're not putting that, I mean, you can put it in your system right and you think you have it right, you better review that 8960. You could have passive activities, they could be actively involved, they could be real estate professionals, deductions, allocations of deductions, the phase outs, very complicated form. So I don't know if you guys had any issues with the form this year. I know it came out late. In fact, I think I had done a return, and when the 8879 came back in, my front office said, well, there's a difference, Jim, and the actual dollar amount had changed on the form. So maybe one of the deductions of the form, I thought it was finalized, which I thought it was, and it changed. So I don't think they had that finalized until the middle of March.
You know what I see as a problem in next year is when you get a new client and I put it, you put in the last year's tax return. Now the federal withholding doesn't equal federal withholding anymore.
That's correct. Yep.
So just to try to put in a prior year's return, it's going to be complicated figuring out where's federal withholding versus Medicare withholding, et cetera.
Here was the issue we had, right? When we process a return, I'll just tell you what we do in our office. We put it through collating, and the front office, who's ever doing it, is proving out the federal withholding on line 62 on the tax return. So they're adding the W-2s and the 1099s, and they're making sure that the wages tie out, the federal withholding ties out, the state wages tie out, the state withholding ties out. When you went to line 62 now, it doesn't tie out. Because now you have Medicare withholding that's embedded in that number.
So wait till you get someone else's return from another firm
Yep.
that doesn't show it to you.
Yep, and that
Next
became,
year.
it became an issue. The other thing was, and I hope everybody did this right, is you could put your federal wages in, right, in your input screen, right? If you don't put Medicare wages in, you're gonna get the wrong Medicare tax number, right, the .9. There's another input now that we're required to do that we never really had to do. There was really no purpose for us to even input that number in the past. So there's another section with another number we got to put in on the return. Not that it's a lot of time, but it's still more than we had to do in the past, right?
It's federal, Medicare.
Well, now you can put Medicare
and state.
But you never had to put Medicare in
Right.
before. Now you do. And now it doesn't tie out, like Gail said, to line 62 because the Medicare withholding's in that number. So now when I get my front office looking and say, Jim, this number doesn't tie out to the W-2s, I got to explain to them, nope, you got to go look at the 8959 because it's Medicare withholding. Right?
I had several cases where people before the age of 50 to 55 took money out of their Roths. And the question was, how much was their basis in it? All that sort of thing. And you look at them, they look at you with a blank look.
Right.
Really?
Well, I think you're going to touch on basis maybe on the New Jersey side, right? Because you had that new line this year, 19B.
Yeah.
So maybe when John gets to that, maybe that was an issue or not during tax season. I'm not sure.
One thing I had, it's actually from a prior year, but with a Roth recharacterization back to traditional IRA, the instructions say it shouldn't be shown on an 8606 if it's 100% recharacterization.
So you went back, you converted to a Roth,
And then you convert it back.
and you converted back because it didn't make sense, or whatever happened.
The market tank.
Right, the market tanked or whatever, right.
But now they're asking for the 8606, but the instructions say not to fill out an 8606.
Does anybody know on that?
I'm dealing with the taxpayer advocate. I'm gonna tell her to go back because she's saying that's what they're telling her.
He's saying that if you convert from a Roth back to the traditional unconvert, I guess, or whatever.
Recharacterization.
Recharacterization, right. that you have to fill out an 8606. I don't know the answer on that. So, anybody else? I saw a hand up in the back.
We just wanted to repeat the question.
That was under the recharacterization.
We can't hear Steve about that.
Yeah, it's a recharacterization of they had converted to a Roth, they recharacterized back to a traditional. The IRS is saying they're going to fill out an 8606?
Yeah.
Right, and he's saying the instructions say you don't, so that, we don't know, I don't know the answer on it.
I didn't do 8606 when they
Yeah.
recharacterized.
I don't think I did either.
Tax year, you got two ten, you got a 1099,
Yeah,
an amended 1099, so.
Well, I think the problem was the 5498 wasn't done right. That's what started this.
Oh, that's the brokerage house.
Yeah.
Right. Anything with identity theft this year? Anybody run into anything?
Yeah, I mean, I'm curious by show of hands, how many people had situations like I experienced personally and many of my colleagues, where you e-file the tax return, you get rejected, where the explanation is either taxpayer spouse, social security number has already been reported on a previously filed tax return.
That's the identity.
And one, yeah, a lot of
Everybody's had it.
And now you gotta revert the paper, you gotta go back, now you gotta go back to the prehistoric days, tax W-2s. You gotta fill out a form 8948, you have to put in an error code, you have to send your client the 14039 identity theft affidavit, you have to explain to your client what happened, and tell them they should check their credit reports and all this other stuff they should do, and,
Yeah, the hardest part is explaining to the client, right?
Not really, because they go, oh, yeah, I'm aware of it, I know that.
Really? I'm not sure about that. Yeah.
You know that.
We actually,
or they get a letter from IRS that makes reference to, we could be looking at your income, deductions, withholding, the only problem is they haven't filed yet.
right.
And sometimes that letter's addressed to
Right.
you and someone else who's not your spouse.
Yeah.
And not your address. I mean, it's
Different part of the
it's
country.
the imposter who's infiltrated your identity.
I had one where the spouse was dead. And someone used their social security number on a false joint return. And I've got the taxpayer advocate involved 2 years because the IRS is dunning the surviving spouse for repayment of the false refund. 2 years we're working on it and can't get it resolved. And the taxpayer advocate, very nice, every 3 months sends me a follow-up letter saying, we're still working on it, we're still working on it. And the reason they say the problem is that the checks that are issued don't come from IRS, come from another Department of Treasury, and the taxpayer advocate has no role or responsibility with other branches of Treasury other than the IRS. So hopefully you never have a client that has a situation like it. It's just very, very time consuming. And then the problem comes up is, do you bill the client for this time?
Of course.
And, you
Of
know,
course.
They bill the other client, the one that got all the money.
yeah.
Yeah.
That's a good point. I mean,
But then that's really
Yeah.
a bad situation.
Yeah, I've had two elderly ladies who received phone calls from people stating, I am the IRS and you better pay your bill, otherwise you're getting.
that was early tax season,
No,
right?
I just say 2 weeks ago.
Oh, really?
That was in the
2
Burton,
weeks ago.
that was in the Burton record. There was a
Yep.
big article about it. It was coming from a prison in Georgia.
Oh,
Yeah.
oh, is
Our
that,
tax dollars at work.
is that the one that was happening today? That was one of the first
Yes.
record today?
Yeah.
But I got a call from a client. It was early January, and the IRS, they said it was the IRS that called the house, and they said they were going to put the wife in jail if they didn't do credit check. I would listen. At a certain point, listen. Sometimes yes, but no. My wife's actually good. But no. But anyway, the guy came in, so we actually had to check because they said she had past balances. So we came, the person came in. We got a power of attorney. We filed it. I got the transcripts. There was no outstanding liabilities. We informed. Everybody knows what to do if there's identity theft and what you're supposed to do, and the forms you're supposed to file. You got to check your credit. You got to file the 14139, I think it is. You should do all those things. There's a hit list of about 5 or 6 different things you should be doing. The problem is if you do have ID theft with the IRS, right, then the following year you got to get that PIN and that PIN never works, and then you're struggling to file a return now, it becomes a hassle. So,
Not really identity theft, or the rejection that dependent social security number has been reported on it previously on a tax
Yeah, I've
return,
seen that.
and you ask the parents, speak to your kids, did they
yes,
file the
did they
return?
file on their own? They already got the.
Oh yeah, little Johnny
Right.
was in college, filed it for himself.
I always,
get Right, to get no refunds, because
Right.
he didn't have anything withheld.
I always just, just if we have it, if the kids do it themselves, there's no way we can know.
Yeah.
I always file the parents first and then the children. Because sometimes I feel that you file the children, they say the number's used already, and then the parents, so I try to do that first if I could. So, anything else? Back there?
What happens if the iPad does not work? Because I just get that, and I thought maybe it was because we didn't have the most recent one, it changes every year. So
Anybody know?
kind of ran up to call the IRS, but I just wanted to know
You said you got a pen
Number, yeah.
and it didn't work?
you did receive a pin, filled out all the proper forms, and I think it might be because we might have had the old pin and not the current one.
Right.
I don't know if there was, maybe it has another reason why.
Well, they tell you should receive a PIN, right? And they tell you to follow up until you receive it. And then, I don't know what else, I guess I guess, yeah, I don't know the answer on it. I haven't had that issue, thank God. But, but with the identity theft, you just gotta, if a client comes in, just make sure you're doing all the right stuff. They tell you to, contact Social Security Administration, credit card companies, like I said. There's a publication out, 4535, you should be taking a look at. You file the form 14039, and then you get a PIN and from the IRS, and you move on, and you just follow up to make sure that everything's clean, and that's it.
There's one more thing with clients that have experienced identity theft or potential identity theft is that New Jersey just recently came out with, what was it, about a few months ago, came out with a form 100-IDT, I think it is. And so if you have clients that either are subject to identity theft or potential, are they suspected, in addition to filing the IRS form,
There's a New Jersey.
file the New Jersey form
Okay,
as well.
I wasn't aware of that. Okay, good. So, yes.
I have a couple of things on the IRS database. One was a couple hadn't filed for a few years, and the return rejected when I put the spouse's married name in, but it went through with her maiden name from a couple of years back. And the other one was an insurance company that took over another insurance company, and the ID number had changed, but the database had the old number, but it rejected the first time with the new number. It went through the second time with the old number.
All right. That work?
Yeah, it worked, though. It's the war story.
Okay. Anything on foreign stuff? Anybody have any issues on foreign stuff? Everybody's doing the right things now and checking the boxes and.
Well, I guess just back on that K1 issue was, and we had talked about this previously, just the whole idea of the fund K1s and the offshore funds and the 926 requirements and the PFIC requirements and all that.
Right.
Kind of similar to the publicly traded and hey, you had $1 distribution or $1 of capital gain from the sale of a PFIC, and now I have to fill out 2 more forms and hard code in $1 of tax onto your return because there's no place for the cert to figure out how to calculate that tax.
Right.
It needs to be reviewed by somebody who looks at 2 of them every year, so he has to go and look at, the code and the instructions to make sure that it's being done right. And there's, a lot of changes on the PFIC end as far as, what's required to be reported and how much information you're giving them. So, that was the big thing for us. I know,
For you guys,
but
yeah.
we had the one client who had, the 3 trusts for the kids and the 3 kids who were all in the same same investment fund.
Right.
That the bill went up by what, like.
Doubled them.
Yeah, it doubled based on 3 K1s, one of which actually required some more reporting and led to tax. But it's just that's what we've experienced, and same kind of process though. Let them know, hey, you want to invest in these things, these are the consequences of that. I hope you make a lot of money.
Right.
Because you're gonna pay a lot.
And as far as Sean, maybe you could just bring everybody up to date. We got a June 30th deadline with the FBARs, which is now called FinCEN, I guess, and.
Well, yeah, the 114, it's still FBAR, but 114 instead of the TDF 90-22. And yeah, that's still the June 30th deadline. Just make sure you get the 114A form, which I basically just this morning went through all the people that we filed during tax season, but couldn't actually file the 114 until CERT would let us in the beginning of May. Went, got all those forms, and sent them through, and I don't know if they've been accepted or not yet, but everything went through fine through CERT, and we've got all that, and now we're just doing our due diligence on the people who haven't filed returns yet, everybody on extension.
And that has to be done electronically now.
Yep, has to be done electronically.
Everybody knows that, right? So don't be on June 28th trying to get set up electronically.
Even prior years.
To file.
Yes, even prior years. What the IRS said originally was, if you file a paper form, we're going to hit you with a $500 penalty for submitting the paper form, and we'll accept it. But now everything I print out says, do not mail, e-file only. So I don't know if you're really going to get away with sending in a paper copy anymore.
Right. And I don't know what tax software supports it and what CERT does.
Yeah, Thomson Reuters,
Yeah,
I think
Thomson
Drake, maybe.
Process.
Yeah,
So it seems like most
I'm
people
pretty
don't.
sure everybody's come around at this
And
point.
you get a separate e-file authority, right, to do it.
Yep, it's a separate form.
I don't know what it is. Not
Yeah,
a separate non- but the equivalent.
114A, but it's the equivalent. The only interesting part is it'll list how many accounts. That's kind of, instead of like AGI and those sorts of things that make you know that it's actually been completed before you're sending this form. It'll say, I am filing an FBAR or with this many accounts on it, and that'll be input. And it took CERT a while to actually produce that form. During tax season, we had to go download that PDF and put it inside of our assembly package and send it out. But by around April 15th, luckily enough, CERT started actually producing the form and printing it out. I don't know what everybody else's software experience was with it.
Systems was online like late February.
Right.
Yeah, I got 3 points. Number one, I understand that if you file through your software supplier, your FinCEN, you don't have to register with the Treasury.
That's correct.
Okay, thank you. Number 2, if you have an old-fashioned client that wants a hard copy of a FinCEN, you can't get it.
Well,
We're sending electronic copies to the government, and if you want to sit there and manually print and cross-check and have a discussion with your client, you can't get it.
Well,
the software is fixed so you can't do it. I beat the software.
Well, with CERT, with CERT, when we print out our e-file package, which includes that signature page, and I wouldn't have them sign it without it, it prints out the paper copy of that with, like I said, do not file, must be e-filed, right? Not a hard copy, because you don't want them to sign that form without having some record. Hey, you looked at what I'm actually submitting for you.
I agree with you, but Thomson Reuters doesn't do that.
Well, yes.
Okay. Number 3, when you do an 8938, Part 1, Question 1 asks you how many accounts you reported. Question 2 asks the dollar amount of those accounts. Somewhere along there, you're also reporting accounts that would be closed and accounts that have been opened. So if you have 12 accounts and closed them and opened up renewed items in 13 accounts, you wind up reporting 25 accounts with twice the dollar amount of the resultant opened accounts.
Yeah, that's been a problem, or at least a quirk in the FBAR filings previously as well. That if you've got all these accounts, you transfer them over, they don't care. The total's going to come over. But I mean, you have to think of it now going forward as you're matching, right? So all you're going to care about is that your number's higher, right? You don't care whether you're lower than what's being reported to the higher. You worry if your number's going to be lower. So the over-reporting is probably that's a good thing, because all those at first it's just going to be basically client information sent to the IRS.
Because the 8939 goes to the IRS. And now, it shows on this line that this particular client had $2,900,000 worth of assets. And you look on his dividend and income reporting, and it matches only half that amount for income. And Uncle Sam is going to come and get his jollies and say, hey, guys, where the hell's the income on the other half? They don't read
that would only be a short-term problem, because if you look at the model IGAs, what's going to happen is all that reporting is going to be phased in. At first, you're only 2014, they're only given very basic information, address of the owner, and the max balance. But 15, they're scheduled to provide that information. It's basically going to be a 1099 by the end of it that they're providing to the IRS. So I think by 2015 they'll be required to report interest, dividend, royalty, that type of income, and then by the end of 16, actually capital gains too, and sale proceeds from those sorts of transactions. So you will. That quirk would only be temporary, because eventually all that's going to need to be handed over to the IRS too, and you'll be matching all those lines. You'll have to worry about all that. Like my only concern from the start of all this was that hopefully those banks are going to provide the client with some kind of 1099 equivalent. If you're a bank that's worried about customer service and does a lot of business with U.S. account owners, you're probably going to be in the business of producing that form eventually, but whether they're required to or not, or if they're going to do it, I don't know.
The only way it's going to happen, I believe, is through tax treatment. Because if you're dealing with a local investment place in a foreign country, they don't give a damn about this stuff.
Well, now they have to, because now they're required by law to do it once their country signs the IGA, because that is basically a second tax treaty.
But the current 8938 does ask you the question: where did you report the interest in that, and where does it appear?
Correct. You have to basically link that to the 1040 and where all that shows up.
Right.
Good job, Sean.
No problem.
Yes, it's complicated stuff, right? I mean, it's complicated. Now, the other thing on the foreign, I just got a letter from one of our clients got a letter, and basically saying that as you're aware, almost certainly aware, the Swiss Federal Department of Finance, U.S. Department of Justice issued a joint statement, blah, blah, blah. So now all of our clients who have foreign accounts, if they didn't do the reporting, they're getting these letters, which are now forwarding to us, and I guess we're going to figure out what to do on these. I don't know if anybody's gotten these letters yet from their clients. Anybody doing anything on them?
You have to show that you've actually filed the FRs. You have to show that you're in compliance.
Right.
You have to prove it to the bank that you've been in compliance. Is what you have to do.
And then they'll take your name off the list.
Then you have to enter into the voluntary disclosure program.
Or not.
Or
let it roll.
It's a crapshoot whether you go to jail or not, but
right.
That's the
But if they respond back and show them that they are in compliance, then their name's going to be taken off the list.
Yeah.
Okay. And everybody's. I assume some of you guys have gotten these letters already. Yeah. Okay.
Yes, we've spoken to some lawyers recently.
Summer work. We got some good summer work, right?
Do they understand it?
Right. Yeah, I mean, we really only, it's only bigger firms that are handling this, and that we right up front, hey, it's going to be a lot of money. Their hourly rates are 4 times as much as our hourly rate, but
People complain.
originally we had handled these things in house when it was truly non-willful and all that, but if they're getting letters now and coming to you, it's probably not non-willful.
I mean, that's the key, I think, for everybody. If you have that, you get that letter, or you find you've got to get an attorney.
That's exactly right.
We do not have attorney-client privilege, and this is, we're used to dealing with civil things. These offshore foreign disclosures are criminal. Potential, I don't want to say criminal, potential criminal to the client. So we have no privilege. Get a Covell letter, under the attorney, then you could do all the work, do the grunt work. We do a lot of that work of accumulating the data, but you want to do it under a Covell letter. You do not want to do it directly for the client unless you are 100% sure it's non-willful. And even then, at this point, you probably still should go through an attorney if you're going to do an offshore disclosure.
Right. Yep. And then the last thing I'm just going to end, right, real quick, 2 things. Just, I hope everybody had fun with explaining to the clients this year, with the new tax rates and the phase outs and the 0.9 and the 3.8 and all those good taxes, how come my tax bill was so much higher this year? How come I paid that much more tax? I mean, hopefully you guys communicated to them up front what was going to go on. But there was some surprise, not surprises, but just extra taxes for our clients. And the rates again went up what 4.9%, 4.6%, and you add the 3.8 on, and you add the 0.9 on, and you lose your dependent exemptions, and you lose your itemized deductions again. I mean, it just you wind up you're trying to explain that to your client. I made the same income last year, and I'm paying $20,000 more.
Good news.
Yeah.
Good news, AMT tax went down.
May have, but I'm not sure about that.
Right, taxes go up, AMT goes down.
I thought so too, but I'm not sure about that. I'm not sure.
I think one of the most surprising things to me with the net investment income test was the trust. I knew that, we all knew that the level was low, but what I didn't really catch initially until we did the return is, you're working off of AGI, and you say, well, the client has all these, investment advisory fees. They don't pay any tax, but yet they would still get hit with the net investment income tax, even though they might not have paid any income tax, because it's an AGI computation, and those investment advisory fees that help create the income didn't get offset for the net investment income.
Right.
Because they got phased out.
Yeah.
It's not a D&I, it's a separate calculation.
It's a separate calculation.
There's direct expenses against your investment income, and then there's indirect expenses. And you got to go through the calculation. It's very complicated because you got the 2% phase out you got to apply against it. Yep. You got to apply the investment interest expense calculation. I mean, it's like 3 or 4 things before you get to what your deductions are actually allowed on the return. Yep. So again, the 8960, if you input it and didn't look at it, I guarantee it's something that you probably missed. I mean, it's a hard return. It's 21 pages of instructions on a 1-page return. So
did anybody take any practical approaches as opposed to going through all the detailed calculations? Looking at it and say, well, this person's, let's look at some criteria. They're in AMT. They're not going to get any miscellaneous itemized. They're not going to get any direct state tax deductions against that. What else is there? And then maybe you cut it off at that point so you don't have a staff person spinning their wheels for 3 hours.
As far as what, the net investment tax?
Yeah, to come up with a net investment income tax calculation.
Yeah, but I'm not sure AMT applies. I think if you have a state...
No, if you're in AMT, you're losing your state tax deductions, let's say, and you're losing your miscellaneous itemized.
Yeah.
But I don't think you lose the state tax deduction for the net investment tax calculation.
You're in AMT.
I don't think so. I think your state taxes, whatever your state taxes are, there was 2 ways of doing it, and it was in the regulations. You could either do it based on, I think, an allocation of your net investment income to your total income multiplied by your state taxes for 2013, or you could actually do it with the net investment tax on the return and without, see what number was, and then you would still get that as a deduction against your net investment income.
Even if you were in AMT?
Even if you're in AMT, sure.
Okay.
Sure. And there was a lot of those that, John, I'm telling you, it was, you could have been as aggressive as you wanted or not. Again, you could have done it, they left it up to you, a reasonable method of calculating what the state tax deduction would be against. But again, you could have lost some of that because of the phase outs on the 3%, and you had to go through the calculation. If you look in the regulations and you go through it, you'll see how complicated it is. But AMT wouldn't affect it. This is your 3rd tax now. You got regular tax, AMT tax, and now your net investment tax. So that's it. So,
and the other thing we ran into was the second home, like the real estate taxes on the second home.
Right.
Where I know in Lacerte they would have like property held for investment, and for years and years we had maybe put that there. And now all of a sudden it was flowing through the net investment income tax.
Right.
If it was personal use, it really.
Well, personal use is really not right. It's really not an investment. Right. It's really is a second home.
Second home. So you had to move that all because it didn't matter, but now it mattered. So you got to be careful about that.
And you're going to be careful, too, if there's a loss on the property and you want it as investment property, that you put it on that real estate tax line. It says investment real estate taxes. So maybe you're preserving a loss later on down the road, offsetting the 3.8% tax you're going to save on the real estate tax for the year. Those are the things you got to look at. I mean, and again, it's positioning, looking at it. I think I'm done. I'm going to take about a 5 or 10 minute break. I do want you guys to think we're going to have seminars, I think, in June, July, probably take a break in August, and then go right, every month through January. So maybe if somewhere along the line you can give us some hot topics you want to hear, maybe the foreign stuff, maybe some of the net investment stuff again. Just give me some topics so that I can provide it to you guys and what you want to hear and what you want to learn, right?
And suggested speakers.
Suggested speakers and that type of stuff. So, because I'm not speaking up here, we're going to try to get speakers in and, on selected topics that you guys want to hear. So, all right?
Jim, are you gonna go through the software later on in the program?
No, that's it today.
Oh,
I'm
I
gonna
just
be on.
wanted, with Lacert, I hear that they're, doing away with the, document management.
DMS is gone, but they're going to have, who is it, Sean? They
E-file cabinet?
and one of the premier file cabinets is going to be attached to Lacert. And from my understanding, it's going to be a good thing, because we were down at the ABT show and I talked to them. It's going to be a good thing because then you'll be actually able to print right to a portal, which you can't do now.
I can.
And they say the conversion is pretty easy. I forgot the one that they were teaming up with, but it is one of the premier ones out there.
But it's gonna be outside of the Lacert, you're gonna have to pay e-file cabinet, right?
I don't know the answer to it. We had tried the extra. I don't know. Sean, you guys know anybody use Lacert?
No, we do, but I think we're just in the.
I've been ignoring those emails.
Well, this is right, because this is probably something in, probably revisit in July or August. But they're definitely getting rid of DMS, and they're definitely going to do, hook up with a team. Like I said, there's another e-file cabinet service. Whether you're getting built through Lacert or through privately, I don't know. But it will have a portal, which is good, because I know when we printed from Lacert, we would have to print the DMS, and then we had a separate portal, so you had to copy and paste into the portal, which is a pain in the neck. If you can print right to a portal now, that's going to save a tremendous amount of time. And you're not going to have a chance of putting it in the wrong portal. Oh, because that's happened. Not me. It's happened. All right. What's up? One more question, Megan. We're going to take a break.
As of May 6th, there's still 122 outstanding acknowledgements with New Jersey 1065s. One is mine. So, because the state says we don't have the return, the tax program says you're fine because it's in there, and it was like 3,000 after a week, and now it's...
How many is it? 122?
122 as of May 6th. So
Well, Howard Bookbinder is on a plane right now to London, so when you get back, he was actually working with the state on that. So, I miss him here today. He always has good stuff for us. So, all right, I'm going to end off. All right.
We were there yesterday.
On the e-filing, John, that they were, in our Lacert software, it says, sent to New Jersey, but not accepted. So there was a holdup between New Jersey. I think you said there was how many originally?
This is 3,000, but this is ATX, not Lacert.
Doesn't matter. I think that we all have the same problems. Yeah. There were delayed returns that didn't go. So I think
my understanding is Howard, I think he certainly resolved the issue. I think it was with Lacert, where he actually got a call from the company. And I think a lot of those issues have been resolved, is my understanding. I was talking to Howard yesterday.
Yeah.
I'm not sure about that software package.
I'm not sure about ATX either.
Yeah, he was talking about Lacert.
Yeah. So I think, so maybe when
It had to do with how, from what I remember reading on the site, it was how they filed it, sent in the wrong envelope or something like that.
They did 2011.
Beyond me, I just want to see it get accepted. So, all right, so 5-10 minute break, guys, and then John will go on. We'll talk about some state stuff.
What's your email? I don't have it here.
Yes.
Whatever.
Yes.
What if someone's fine?
I'm getting them.
Covered in the
Already involved.
And even what you submit, they have like that gets vetted by agents, and if there needs to be a change, all that. Right,
Sales tax on accounts and
nothing's
CPAs.
final.
It always seems to come up every 4 years.
This year, I guess didn't make the cut, yeah. But it's all.
Nothing's final.
Yeah, when you submit it, it's really not final.
It's gonna take a year.
Oh, I just asked to go back to the agent. Got him when it's time to get preferred. I never deal with them.
You know, if you just have to do it.
You're employing me, it seems like you get a tax notice in 2 weeks later, it's an hour in. You know, like, you're kidding me. I said, I didn't have a chance to do this. Not going to approach. There's no income. You get a hotline number, I'm just telling you. That's the greatest thing the state does. So, tax practitioner, I have gotten stuff resolved on there. I tell the client, I'm going to do that, and I'm on 15 minutes. And then I'm done. I mean, they are the greatest people in the world. I know everyone from that. Jackie and Christy and all of them. I know everyone from down there. They know where. And they get stuff resolved in a heart.
And they even answer questions, no,
But if you got collection issues, they're okay.
But most of the things, like virtual, you can say, 2 weeks and you're there.
Yeah.
These things don't belong.
Yeah.
That's a frustrating. So you gotta like call the thoughts off and then focus on the real issue.
You go to the fix it, right?
My wife and I are expecting huge first.
That's cool.
So I got
All right.
Guys, ready?
Yeah.
All right. Hang up there. Maybe we'll kind of go back and forth if you want. Yeah. It's all right. I gotta introduce you. All right, we ready to get started, everybody? Ooh, sorry about that. All right, we're going to cover some state topics now.
Why?
Why? State taxes is sensitive, that's why. So, we did have a directors committee meeting yesterday in Trenton. So we do have some things to report from that meeting. We'll give you a brief overview. We don't have the minutes drafted at this point, but at least we can give you some high-level overview on some topics you should be interested in. Today is my last meeting as head of state interest group, and Mark Phillips, the vice chair. Mark's from KPMG. Mark's going to be taking over this group. Mark will be as of June 1st, because we have a 5/31 fiscal, and Mark will also be still chairing the directors committee, and he will be on the directors council, which I will be rotating off of, because whoever heads up the state tax interest group represents the CPA Society on the directors council. And directors council, just so you know, the difference between the directors committee, which is a group of us going to Trenton and sitting down and going over issues, both statutory, regulatory, and administrative. It's a group of people from industry, large corp, small business, small CPA, large CPA, regional CPAs, attorneys. So it's just a mixed bag. So it's a different group. They tend to go over similar topics. So just to give everybody an understanding of what we do beyond coming here and just doing the monthly CPE sessions. Jim was kind enough to throw on some hot topics here that he certainly dealt with in his firm, and I'm sure a lot of us have dealt with them in our firms. Solo 401k plans, I don't know if anyone had any trouble dealing with these. I mean, this is an issue you added. I did have someone ask the question through listserv as to how New Jersey treats the solo 401ks. So it's a Schedule C with a 401k plan. New Jersey treats it the same they would as any other 401k plan. New Jersey allows it to be pre-tax. Yes?
John, I'm sorry to interrupt you. Could you speak at the mic, or we have to mic you just so the people on the webcast can hear you? Or we could put a microphone on, either way.
Right there at the podium. If you stand at the podium, they can hear you.
No Landelier?
It's hooked up to the podium right now.
Oh, all right.
I need to
Oh, I
find out
see
where
it.
it
Yeah,
goes.
we don't want to twist it. It's going to take forever. I like walking around,
Sorry.
nervous. So the solo 401k plans, they're not treated any differently. So you would just take that deduction on the Schedule C and take a benefit for that for New Jersey purposes, because 401k plans are pre-tax for Jersey purposes. I don't know if anybody saw the response, but I did get a response from the Division of Taxation, and I circulated that also through the listserv. So I'm assuming that was why you brought that up?
I think so, John. I think there was some, I think they came out in, I think maybe 2012 and gave clarification on it. But I think if anybody has a set plan, right, and you're allowed to deduct, what is it, 25% up to 52,000, right? I don't know why anybody wouldn't be doing a solo, if they have no employees, obviously. I mean, doing a solo 401k, where you can actually get a deduction in Jersey also. Because the SEP, you're not getting a deduction in Jersey. The solo 401k, you're getting a deduction in Jersey. At 52,000 times the tax rate in Jersey, you're probably saving, what, 9%, maybe 4 or 5 grand on a Jersey return, you know, in a high earning year. So, I mean, I just wanted to make sure everybody was aware of it, that, you know, a SEP versus solo 401k, there is a difference. Well, there's a little compliance, I think, side on the 401k, you know, maybe $500 annual fee or something.
Right, but you're getting the benefit. I mean, that's the key benefit. Turn down the coughing person on the phone. Whoops, that livened up the crowd.
Could have been a coffee that was like the worst colors.
Pennsylvania local taxes. Have we had any issues with that, or are people just not doing it and waiting for that notice to come through? And that's for both businesses and individuals. And I've seen this done. I mean, sitting in Jersey, you tend to do a lot of Pennsylvania work. I'm sitting in Manhattan now, so you don't see as much Pennsylvania. But there's a lot of local jurisdictions outside of Philly and Pittsburgh and big, the ones you would expect, that have these gross receipt type taxes. They also have some pretty draconian apportionment methodologies that they use in order to throw back certain gross receipts back to that local jurisdiction. And the only way to defend or to come up with an alternative methodology for that and to be represented in front of these local courts or local municipalities that impose these taxes is you have to have an attorney with you. They won't allow you as a CPA to represent the taxpayer. So it can get really ugly. I guess there's two things to be aware of. One, there are a lot of local jurisdictions. You know, you're in Conshohocken, and if your company and if your client's sitting there in Conshohocken, you better know that there's a gross receipts tax there, and they have an apportionment factor and a throwback methodology to that location. And I had a client in a local jurisdiction in Pennsylvania where the local gross receipts tax was more than the rent they were paying. And they went back to the municipality and said, this is ridiculous. We're just going to move across the river because the other town doesn't have this tax. So they negotiated it down. So they are flexible. They will be flexible in negotiating with you because they don't want to lose a good taxpayer. But if they can sneak up on you if 2, 3, 4 years goes by and your client's not paying these taxes. And the individual localities can be difficult. I know Go System's not the greatest in doing the local returns. I know our firm uses Pro System. When I was at my prior firm, our Pennsylvania office used Pro System and not Go System because Go didn't do a lot of the local returns, and they were doing them out of super forms. And if you do a lot of 1040s, it's a nuisance. But you know, looking at the software and making sure that they get done properly, and that they're calculated properly. Usually a simple one-page form. A lot of them are just picking up wages. They don't tend to sometimes they don't pick up pass-through income. So you really got to look and make sure you're doing those correctly. Now, if it's a local employer, they should be withholding both the state and the local tax for the residents there. So, you know, hopefully it's a net zero on the return because usually it's just a gross flat rate and there's no deductions or anything. So just make sure that you're doing those. Sometimes those local forms, if you can't get them, you can easily get them off the internet. The municipalities have them on their website. You can download them, and it's a hassle, but there. Yeah, the question.
The fact is that you can work in one municipality that withholds at a different rate than the municipality you live in those states. So therefore, if you live in Conshohocken or whatever the hell it is, and it's 1%.
You said it right.
But if you live in, and your employer withholds 1%, but you happen to live in Upper Saucon, and it's 1.6, you're short 6.
Right, so then you're subject to
Estimate.
estimates, possibly. What was that, Jim?
Yeah, I mean, impose a penalty.
Yeah. So it's just something to be aware of. I mean, we're close enough to Pennsylvania where we've got a lot of folks that could be clients of ours that live there and work there. Jim?
The usual situation with wages is people working in Philadelphia and then having to report on the local tax and the fact Philadelphia is holding a lot more, so that it nets down to zero. But it's still got a piece of paper you got to file.
Right, and New Jersey provides pretty good guidance on the credit calculation for taxes paid to other jurisdictions, and I think they use Philadelphia as an example as to what you can get as far as a state and a local credit. So that's pretty well laid out in the instructions in Jersey. So if anybody's never looked at that, they have some pretty good guidance there, because I'm sure that question was asked 1,000 times to the division.
John, we talked on the phone, but if I have a New Jersey resident and I work in one of these, was it Chocahawken?
Conshohocken, or West Conshohocken.
And I have 1% withheld for that Jersey resident on that local tax. So if she makes $50,000, $500 withheld, right? Is that a flat tax, or are they actually required to file a local tax return?
You have to file the return.
You got to file the return.
Only in the locality you live, I thought.
Right.
I thought so too.
Yeah.
But she lives in
the-
Jersey.
Yeah.
She's a Jersey resident working in Pennsylvania.
Should be reciprocal and not have to.
No, not on the local tax.
Not on the local.
Not on the local tax. So the question became, do you actually have to file that local tax return, or is it just a flat tax and you're done?
Not for where you work. For where you work, they should be taking it
They
out.
do, they take 1%.
At the correct rate and withholding, and because originally they weren't required to, but now it's law, just like Philadelphia, the employers are required to take care of that and
Right.
take it out for you, whether it's your residency or where you work.
But you see,
So I think it's only filing a local tax return for somebody who works in one locality, lives in another, has to
Right.
take a credit, or just where they live in the PA locality.
But if you're a resident of Jersey and you work in that locality, and you have a 1% withholding, no filing requirement,
No.
right?
No.
Just a flat tax.
There's the
Yeah.
only-
what happens on that, Jim? You can claim it as a foreign,
As a credit,
as a credit, right?
right, in New Jersey,
Right,
and as a state tax deduction on Schedule A, I would assume.
exactly.
Right.
The only reason you would file is if there was a mistake, probably on the withholding, but typically you would go back to your employer to correct that error.
Right.
Because a lot of them are 1% or 1.5% of your gross wages. So should be the right number. I guess
Should
that's
be.
why they don't require a withholding
Right.
for non-residents. So, anybody else want to bash Pennsylvania on their local taxes?
You wanna look at the, Washington?
Maybe you could tell us where Conshohocken really is.
I know where it is. It's right next to West Conshohocken.
It's east on the west
Right
side
across
of
the
Philly,
river.
right? It's on the west side of Philly.
North.
Yeah, it's a little west of Philly. New York college credits. Did you mean, you talking about college credits or the 529?
College credits on the return.
The New York.
New York return. It came up a couple times on the New Jersey Connect. So if I have a Jersey guy working, I mean, these are just my suggestions, you don't have to
Right.
talk about them all, but.
Well, I'm not sure what the issue
Yeah.
is.
Well, just, when do you get it? Is it for undergraduate school? Do you have to live in New York to get a credit?
You have to be resident.
It's similar to the 529 deduction.
No, the
No, I think
education
it can be
credit
anonymous.
is on the itemized deduction
$10,000
area for the New York non-resident tax return. I think it's $1,000 or $2,000 per, no, up to $10,000 per child.
So they get the credit on
The
the
New York College Choice Savings Program, that's be the New York Section 529 plan. You get a $10,000 deduction on a joint return, resident or non-resident. And I
Right.
was referring to
Right, that's correct.
$400 college tuition credit,
That's for only New York, right.
only for New York State residents.
Okay.
That's the equivalent of the 8863 on the federal.
Is that what you're referring to?
For non-
So it's only
Not
for
the
residents,
credit.
so that was the issue, I guess.
Not the $400 credit.
$400 credit's only
4%
for
of
residents.
10,000 of tuition.
Right.
Okay.
Maximum $400 credit. School name, IN.
That should put a dent in tuition.
Yeah. The textbook.
Better than nothing.
You can buy a book.
One textbook. delayed returns? Are you talking about filing of the returns, or?
I think we talked about it with, the partner, we talked about it before, the delayed returns, that they weren't getting accepted by New Jersey. We talked about that.
Yeah, there was some gaps too, where some returns were filed, and payments were shown on the return that were made, but the person didn't, and they might have filed the return in March, but they didn't cut the check until April 15th, because they didn't want to pay it early. And they paid by check instead of through electronic funds transfer. So there was a delay in the matching, and we brought this up yesterday at the directors committee meeting, that the state had some issues with that as far as the matching because of the timing. Some notices had gone out, quite a few notices, if I remember. So the state said that they'll obviously work with everybody and they'll abate the penalties and interest, but unfortunately you're going to have to respond to them.
Yeah, and I noticed today on the Division of Taxation's website that they have a blurb right there, like front and center on the homepage, about the delay and just all the types of issues and it really it's them apologizing even, which I haven't really seen on their front and center on their website before. So, and I think they put like the hotline number on there, and the director seemed very sensitive to this issue, and they're really trying to do what they can to help these refund checks go out if people are still waiting on them.
I would agree with that. I mean, the division under Mike Bryan has been pretty friendly and cooperative. Question?
I ran into the problem about a week ago. What I did is I went to the New Jersey website and I looked up the estimated tax payments, the account, and it was matched properly on there at that time. Then I called into the state of New Jersey, and it was literally a 5-minute phone call.
Yeah, he did say that you don't have to write a letter necessarily. He said if you just call up and everything's in order, then they'll just tell you no, there's no further action required. But if your client wants something in writing, you're going to have to unfortunately ask for it.
Yeah, but on the state end, it does seem like the people at the hotline are trained to expeditiously resolve these issues.
And they will send a letter back showing your accounts and balance if you ask for it.
Yeah, you got to ask for it.
That's a good point. That helps with the client, that's for sure.
Yep.
It seems like they've had this in years past. I remember this more years before this, more than even this year. Where clients are getting these notices saying that they didn't register their payments.
I think last season there was something on, because they established parameters last year about to help build additional controls around fraudulent refunds and fraudulent returns. And I think that, I don't know if that's what you're thinking of, but that's one thing that happened last season. I think that.
Well, it happened in this season too. They kicked out a lot of returns if there was excessive withholding. So if you got an S corp or something and you're bonusing out at the end of the year and you're trying to cover all your shortfall, which would be the taxes associated with wages plus maybe some pass-through income or investment income, if it's over a certain percentage of the gross wages, it automatically gets kicked out as under the fraud detection, and then you have to send in all supporting documentation. So the state's saying, if you are playing that game, and if you don't want any notices down the road asking for additional information, just pay estimates.
Yeah. But if the home address is Alpine, not Patterson, it should go through.
Yeah. But it's, just some issues that we got to deal with the electronic age today. I'm going to jump back to New York. I ran into this issue, and I don't know if anybody else has seen this, but it's maybe unusual. It may 200 couples, and this might be seen frequently with civil unions and things, and same-sex marriages, where you've got two earners, and they're both significant earners. And I had a situation where one husband was making $1.2 million, wife was making $800,000. I know it's not fair, but she was under the threshold. I think it's $1,027,000 or something like that for New York. So her wages were taxed at 6% and change, and his were at 8% and change. If they file joint, everything gets taxed over that threshold by the 8%. So there was about a 2% difference, a little more than 2% difference of tax savings on the New York return by filing separate. I thought that was interesting. I don't see that. You don't necessarily
Did
see.
you file the federal separate?
Yeah.
Well, yeah, you have to be consistent. But it's just one of those things to be aware of. And I'd have a lot of 200 couples that were making that much money on wages or through the wages. And it wasn't a complicated return. It was a relatively simple return. But it's just the way you split it up. And it was pretty much a push for the Fed and Jersey. But New York doesn't split the higher bracket. You know, it doesn't take the married, filing joint, just split it 50-50 down the line. You can actually play that game there. So.
I think, John, you have that in New Jersey also. In New Jersey, you can have a situation where married filing joint for federal purposes will give you a tax aid, but if you file separately for New Jersey purposes, you can actually have be reversed where you save more money in New Jersey by filing separately. It has to do again.
So that's the same thing with the 500,000. Okay, I never ran into that in Jersey.
Yeah,
That's the first time I saw that.
happen a few times.
So I guess you may have a situation both in Jersey and New York. So I'm shocked the states do that, allow that to happen, and didn't just split it down the middle. I had to go back and look at it 3 or 4 times. I'm like, that's odd, you know. But it is what it is. Credit for taxes paid to other states is always a challenge on the New Jersey return. Has anybody run into any unique issues with respect to that and making sure that you're using the same methodology on the New Jersey return when you calculate the credit for the tax paid to the other state, or big disparities? Has there been any horror stories?
I don't remember the exact circumstance, but I had Philadelphia and Pennsylvania, and the instructions on the NJ 1040 disagreed with GIT publication.
GIT 9, I think it is, yeah. They're actually, that was recently?
Yeah.
If you could send that to me, if you don't mind, and I'll let the division know, because obviously they'd like to be aware of that. I didn't know.
Publication for one.
Okay, thanks. Has there been any audit horror stories or anything about the credits?
Well, this time we're getting a lot of letters from New Jersey because of federal tax audits.
Because of federal tax audits?
They seem to step up. I guess the state of New Jersey has actually taken the information they got from the federal and sending letters through saying you've been ordered by the federal and making adjustments.
Well, last year Mike Bryan did enter into more of a formal agreement with the IRS in sharing that information. I haven't seen, you don't see that many IRS audits anymore. I know I don't. You see a ton of state audits, but you do have a handful of IRS
If
audits.
you don't see, if them, I'm definitely not going to see them.
One I got, we thought it was CP 2000 order, 99 all on the calendar. On February 10th, we have a copy of it. And then we paid the federal taxes, and we forgot about the state. And we got a lot of the state and I'm fighting saying that it's Iowa distribution, so we're trying to figure out what percentage is taxable. And I mean, not a lady dies.
Complicate things. All right. I mean, that's good to know. I mean, it's good for us to know that the state is actually, looks like they're actively communicating with the IRS with audit issues, and I'm sure the state is going back to the IRS with issues that they may uncover. Probably more on the corporate side, I would think, than on the individual side, because of the gross income tax regime being so different from the federal tax. But I wouldn't be surprised if they're going back and going the other way as well.
John, what about the issue? A client received notice saying that one state, New Jersey, has not received their CBT 100 for the years 88, 89, 90, 91, and 92. I spoke to the agent. I said, "You got to be kidding me!" And they said, "No, we need the returns." And I said, "Well," she goes, "just file them. There's money paid in." So I said, in other words, there's a $25 for those years, whatever. So I can't tell you.
Right,
You know,
the state won't tell you what's on your account.
Yeah, so.
They'll confirm what you say, but they
Yeah.
won't tell you how much is on your account.
So they're gonna get, I asked the taxpayer, I said, I don't know, we've flooded out 3 times since then, I have nothing. Spoke to the previous accountant, he goes, I get rid of everything after 20 years.
Money.
That's what he said, I guess he just wanna look good. So I'm filing, those inactive returns. 'Cause
I mean,
have
if you want tax clearance for some reason and formally dissolve the company, they're gonna force you to go back and file those back returns and annual reports. However.
You have to reinstate it.
Right, if you want to, you gotta reinstate it before you can dissolve it.
Right.
But if you want to just let it die in the vine and you tell the state, it's not a trust fund tax,
No,
and you don't mind.
They
getting
have money,
notified.
I said I'm gonna file them, inactive returns, they said, fine, just send them in. They sent me, Xerox copies of them where you can't even understand what line is which, they're so blurry, but
Yeah.
that's what they're gonna get.
I mean, you could put it through, but still the minimum taxes and the
But
back
it's already
interest, that adds up.
No, they said there's be no penalties or interest, because they had
the money.
They had the money.
Oh.
So,
I went through a dissolution, they asked for the 91 CBT. We just did it a couple months ago, and I said, I'm on a 91 CBT. They said, just have the clients come in, write a letter saying to the best of their knowledge, they filed a 91 CBT, and she let we just got a clearance, tax clearance certificate, so we're done. So we didn't have to file a return, they just said have the client prepare a letter, sign off, I think we had to get it notarized, and we sent it in, and that was fine.
I can see something like that happening if maybe there was inactivity in prior years and they expected
The
nothing
first year that they
returned.
were in business, like the first 2 days, they incorporated whatever.
Oh.
Yeah, but they took a letter, and she actually closed the case and issued the tax clearance, so.
Well, they did, Mike Bryan does not want a lot of little things clogging up the inventory of cases and issues that they're dealing with, and if it's a small dollar item, they can get it off and settle it and just move on. They're trying to do that across the board, both at the audit level and the appeals level. And anything that's potentially in tax court that they think they may be able to resolve back at the division, if you could talk to the Attorney General's office, if it's already been docketed with the tax court, and you could certainly request them to bring it back to Division of Taxation. I've done that in the past, especially if it's a debits and credits issue. It's not a subjective issue or a legal interpretive issue, and it shouldn't be going to tax court because 95% of the cases are property tax cases, so you're not necessarily going to get a judge that deals with a lot of income tax issues. So, the division has worked with us, and the Attorney General's office has worked with us to resolve these things back at the appeals level, or I've had situations where somebody blows the 90-day statute for requesting appeal, and
You get it reconsidered or something.
yeah, well, the state will bring it back and take a look at it, maybe have a new auditor look at it or the same auditor, but the client has no appeal rights. So if after that second round you're still not happy, too bad. Then you got to go to tax court. But they will consider situations like that to try to resolve things and avoid things from going to the next level. That's something to keep in mind. Yes?
We had an issue back and forth with, the client was going before a DBA, and they said that they didn't have a valid corporate status anymore. They were inactive, but they didn't have their annual reports. We went to file the annual reports, and then we requested for reinstatement, and then all of a sudden they came back and they wanted tax charges, like 90 days. And we said, we told them all we had to do with this. We found that the Division of Taxation and Income Tax, they didn't speak to one another. Two departments, and every time we spoke to one, they told us one thing. They said, the other department, and they were like, well, we don't communicate, our records are not the same.
They're not, actually. Division of Revenue, which collects the annual report fees, used to be the Secretary of State years ago. Now it's the Division of Revenue. They do not overlap. And, it's complicated, and unfortunately you have to deal with the Division of Taxation for tax filings and the Division of Revenue for the annual report filings, because the two departments are completely separate.
They're giving you misinformation. They're telling us, we would have known this, like the client said, I would have just, if my corporation was valid, after everything we went through, it cost thousands of dollars. He said, I would just start it off all over again, this is crazy. But, you know, they kept saying, this is all you have to do, nothing else has to be done, just file these and it's like gonna be $200 when you're done. And then when we were done, then this whole other thing started happening.
Yeah, I mean, in my experience, you have to do both. I've never seen it only one or the other in order to get reinstated.
Sure. Hey, John?
Yeah, Barry.
Why don't you go to the tax advocate state on that issue? They might do something.
I mean, you could try that, going to the taxpayer advocate. I don't know if they'll, to waive the minimum taxes and all the back filings. I mean, it's worth a shot. It never hurts to ask.
We did. We had nothing to do with that. We can't handle both departments either.
No. Well, the taxpayer advocates, just on the income tax issue, are the minimum taxes, because the annual report you said are already filed, so that's already done. So if you go to the advocate's office. Yeah.
And no one cared about it.
Yeah, unfortunately, that's it.
Communication. So what do we do about that? What is our, so what's our, how do we fix it?
Unfortunately, the minimum tax is statutory, and I think the division's hands are tied as to imposing that tax.
We have used the Premier website, which is what, Erwin told us to use.
Mm-hmm.
To use the Premier website, which is what we do. And it says that, okay, everything's active, but then we found out it wasn't active. So, they have their information for income tax and, also their annual report, all on the same website. But it's the information that was right.
Yeah, I mean, a corporate charter was probably active, but from an income tax standpoint, you were delinquent. So you were active, but you were delinquent. So that's, and a division, I think, unless somebody disagrees with me, I think their hands are tied as far as imposing the minimum taxes for all the back years. I mean, they have flexibility in probably waiving the penalties and interest. And maybe they'll enter into a closing agreement and come up with a smaller number at some point, especially if there's 15 or 20 years at play. Then your fees end up exceeding tax. So it's a nuisance, but that's why we all went to CPA school. Deal with this stuff.
Yeah, I
never knew what we were getting into, right? Yes.
How come I'm always depressed when I leave these meetings?
I've kind of got divorced this year, and I apologize, but she got New Jersey credit. But the state sent back a letter, and they want copies of birth certificates, marriage, they want all the documents.
Right. Earned income credit is the highest area for fraud with both the IRS and the state of New Jersey.
Small compared to the federal.
Well, it's not necessarily. Mike Ryan said yesterday that they stopped over $20 million of fraudulent refunds.
And how much did it cost
this year alone? Based on, the earned income credit is one of the biggest things that the IRS said how many billions of dollars.
Yeah.
It was $26 billion or something. It was some ridiculous amount of money of fraudulent refunds that go out from the IRS, and the earned income tax credit is the biggest culprit because they'll have these preparers that'll set up shop somewhere or offshore, get this information, file all these returns with bogus information, W-2s, and get these refunds. And the state has all these blocks in place. Okay, if it's earned income credit, maybe that person never got one before. Yeah, so now they're looking and say, okay, here's a new person. So that's probably flag number one. Here's a new person. Let's ask for all the information to make sure this person exists.
She sent me the letter, and I keep fixing it. It's coming up on my desk because I just didn't want to deal with it.
Right.
Tax season. Look at what they asked for, and I go, decide,
The answer is you have to answer the letter and apply all the information, or they're not going to, they will dismiss it there. And that came from the state of New Jersey people. You have to answer those letters, sometimes twice, sometimes 3 times, but you have to answer them, or you walk away from the credit.
A couple of years ago, we got a name, someone dealt with something, I don't know her last name. There's some person in the state who handles this stuff.
Yeah, I'm not sure of anyone in particular. I know that the state sends out a ton of those notices. We had a question back here.
I'm sorry, I can't hear.
The first year they applied for unearned income credit, they had to file a transcript of the return, birth certificates, W-2s, all this stuff about the children.
Right.
And they finally got it 4 months later, the second year. They filed the return, I asked the client in May, did you get the letter requesting the information? He said, no, I got my refund check. Apparently, it's mostly the first year you applied.
Yeah, I think it's first year, and there's other flags. Obviously, if they see if they see a practitioner with a PO box asking for 100 earned income tax credit refunds, all going to the same address, there's all kinds of stuff where they're flagging these things.
I think this is about the only state earned income credit I did. And one because she got the Rosen, the mathematics is Rosen. This is the first I don't want to do work. She's capable. She hasn't filed her work for the full shift sitting on the desk.
Yeah.
For me to get this information, it's going to be impossible. No way.
Say, well, you got to pull everything together and put it in order, or you're not going to get your refund.
I was hoping you gave me a magic.
No magic answers, sorry.
For that one.
I know we're running low on time. There, what do we have till 4:30, and then Neil's up. Someone brought up the new line 19B on the tax return to put in the basis of your pension plan for New Jersey purposes. Does anybody have a client that they know the basis of any pension plan of any client?
No.
Well, right. How do you do it?
New Jersey.
Your own.
New Jersey.
Yeah, we all know our own. That's the problem. It's everybody else. That's a very difficult process, and I think there's probably a lot of swag answers going on 19B to come up with that number, and I think probably a majority of taxpayers are probably paying the audit lottery because they really don't know. Transfers between accounts, switch jobs, how much is the earnings versus the contributions. How do you know that? You've been contributing for 30 years. It's nuts to try to be able to figure that out. The family leave insurance, excess family leave, we did discuss yesterday that if there's a 2450 that has to be filed when there's excess SUI or SDI, it has to be paper filed. I think that was the issue, right, Mark?
Yeah, so apparently during the tax season, a lot of people who needed to fill out the 2450 had e-file rejections. So the Division of Revenue gave us the parameters in which that would occur. So by tax type for UI, WF, WSF, if the excess amount claimed on 2450 exceeds $131, you wouldn't be able to electronically file. For disability, the threshold was 111, and for FOI, if the excess amount exceeded $31, you couldn't e-file. And I mean, we talked to them about maybe increasing those thresholds, but as a group, were there a lot of people that experienced that? We told them we'd get a better sense of how big of an issue that really is.
Or you see some W-2s where they have one number for
$61 for everything.
Yeah,
That's somebody who
but
supports temp
yeah,
jobs
they don't break them.
constantly.
So I guess the question, did anybody have that as an issue, a major issue, or it sounds like the thresholds, if you didn't have it as an issue, were adequate and not
It's kind of specific.
It might be more of an
If they were too low, then we'd have a whole bunch of issues. But it sounds like the thresholds were probably high enough.
That just sounds like 2 jobs, right? Basically.
Well, it's temp
two
jobs.
jobs.
Yeah.
Right.
You got 2
Yeah.
W-2s, you're going to be covered.
Okay.
Oh yeah, it's
really
probably
two
primarily
jobs.
2 job people.
Making more than whatever that low
It's really
threshold.
more
Yeah,
than
right.
2 jobs. If you have somebody who works temp.
Sometimes they would hold $31.94, and the software would find up to 132, and you get rejected. Then you check it back, and I would have to make it 131.
130.
Yeah.
Client's not going to miss $2, right?
I mean, and this isn't for the refund, this is just the e-file. It was getting rejected by the-
I don't know if the feedback on the rejection would tell you the threshold so that, I mean, now we know.
No, my
Right.
the software said this cannot be e-file
Because-
you have went over
Oh, okay.
131.
All right.
You see, okay, it was 131. But some payroll companies take out 131.56
Yeah.
cents. And you sit there and go,
Right.
I didn't want people.
Right.
Life is-
Now, we only have 4 minutes left, and I wanted Mark to talk about one or two items that we went over at the directors' meeting with annual reports, and maybe pick everyone's brain on. You want to get into the simplified CPT?
Yeah, I can mention it.
Okay.
Just get people's wheels turning. So,
Talking
sure. So, a couple things that came up is something that's in the pipeline in New Jersey is, it's been a bit of a nuisance for some, and I think a most often missed item when it comes to the annual reports, because that's a separate online thing with the Division of Revenue. We talked about having to reinstate in some cases, and to help not make that such a, I guess, most often missed item, the state's thinking of marrying that up with the CBT filing. And yeah, so it's kind of gone back and forth over the years. But one of the things that they stress a lot is, if you recall, New Jersey has a very unique 10-digit ID number. Some clients don't always have that, and that's going to be key in order for the annual report to post properly and the payment to post accordingly as well. So just something to be aware of. There is the ability to go to the New Jersey Gateway Business
Gateway, yeah.
Yeah, the Business Gateway, is that what it's called? And you could go through the prompts as if you're going to order a business status report, but not actually go through and order it and pay the $5 or whatever it is. Once you do, let's say, a search by legal entity name, that 10-digit ID number, the entity name, and the address will come up, and then you could just retrieve it that way. And I've done it a bunch of times for a number of different reasons. It really takes 2 minutes.
Yeah, you have to. What they're suggesting is that we, for this tax season, start going through and trying to get that information. If you're not already reporting it on the CBT return, make sure it's accurate, because the annual reports may be coupled with the CBT return for the 14th filing year. Now, payments for the annual report have to be separate. So, because you have two different divisions, Division of Revenue, Division of Taxation, so you can envision your CBT return where everything's included on the return, but you're going to get two instruction pages with two different payment vouchers. One for the annual report, one for the corporate business tax. So that's...
Yeah, but if you're filing electronically, it's all the
You
same.
can file electronically, and you probably have everything paid at once. They did say that. They did say it's going to be an electronic payment, but your client's still going to see two payment vouchers that you have to reconcile. Kind of like North Carolina does. I think it's North Carolina does that. You see like two
It's the same thing
vouchers.
Same thing as the 927.
Yeah. You're right.
Yeah.
The GIT is separate from the unemployment.
Now, LLCs are not going to be doing this yet. They want to bring LLCs on board, but one step at a time, taking baby steps here, hopefully get the CBT to work. Not in the past where it didn't really work that well, and then they pulled it off the CBT return. Now they want to bring it back on, trying to make things easier. So,
yeah. Well, you also have the single member LLCs. I don't know if they're going to ever have that.
it's the same thing. I mean, and that's part of the struggle with the LLCs. If you file on a partnership return, maybe it's a little easier for them to codify it, but to do it on a GIT return, then you'd have to have probably another line item on the GIT return to bring in an annual report fee. If you have a Schedule C, that's an LLC. So it gets challenging on the LLC side.
Another thing that's just sort of in the works, we've talked to the division about this in the past, not necessarily yesterday, but we mentioned to them hopefully creating the ability for a short CBT return, since the thing's like not 12 plus pages.
19.
So I would say just to the group, if you could start giving that some thought, please, just email us or me. We can start taking John, giving John some reprieve.
Mark and I were kicking it around and saying, you know what, the Fed's threshold's 250 gross receipts, 250 assets. Use the same threshold. Take a CBT return and start striking out all the schedules that are
unnecessary.
Irrelevant.
I mean, you may not be able to apportion out either. I'm not sure if they're going to let companies that apportion do this. So that we got to kick around with the division. See, they want suggestions from us.
Yeah, they
So
do.
we want to, we got the inactive return, which is simple and that works.
But when you really have zero assets.
But yeah, I mean, there's a couple of companies that are just keeping alive for whatever reason, for legal purposes. And then you got a 19-page CBT return and a 2-page inactive return. Can we get something in the middle that's maybe page 1 and 2, maybe the M1, and if it's an S corp, Schedule K and the K1s. Keep it simple. No Schedule H. No apportionment unless we want to. I mean, if people want apportioning companies to do this too. I mean, we could keep the Schedule J in there. It's going to be a single factor anyway at some point. So maybe we throw that in. We try to preserve that.
What about just doing the pages that you need? You don't need 7 pages depreciation if it's.
All right. Well, I mean.
Yeah, I mean, sometimes we just leave it out. Honestly.
Like the IRS, we don't use a form, they're not going to print it.
My understanding is that
The
as long as you
IRS
have the first
forms are
4, it's not going to get rejected or anything.
Does anybody know offhand? I was trying to remember offhand if the M1's required for the Fed, if it's 250. Is it no Schedule L, no M1, no M2?
Yeah, no, we don't need it.
So I'm suggesting the same thing. No Schedule L or whatever the schedule is on New Jersey B or something.
Yeah.
Hopefully, Joseph, getting rid of that page 1 of GIT for that optical reader that they don't use anymore, I guess.
Well, I don't know I don't know if they don't use that.
Yeah, but if you e-file it,
It's a waste of paper, you said?
for me, because when I have them look at it, like.
Don't you electronically file?
Well, no, it's a client copy, I guess, right?
Yeah, and
They
when
get
you look at
electronically.
it,
Yeah, I mean,
you know, what happened was, usually when I look at it, I don't want to look at that page, I want to look at the numbers, and it doesn't make sense. To me, it's a useless piece of paper.
but I guess if people are paper filing, they probably have to have that.
Who paper files?
A lot of people pay.
There's a
Not
few.
many, but there's.
A lot of seniors, I think, that.
Some do, some don't.
But
Yeah, in the interest of
we're
time,
eating
I don't
Neil's
wanna
time.
go
I know he's anxious for
too far into it. One reminder, and then I guess a question. We sent an email out actually about any potential comments you may have to the sales use tax proposed regulation regarding taxability of software. And so this is probably the most detailed division of regulations has pretty much gotten. This has been something that's been 2-3 years now in the works. The society has provided comments in the past, and we have a couple in the works, but just please email me if you do have any other suggested comments, and then we could organize that as a society.
And this latest version is new, so look at the latest version because they did make some modifications to the recently circulated proposed regs for comment. So this is a second round. So it's maintenance services. Your clients paying software maintenance services, and is it a consulting service? Is it maintenance and repair? Are they changing code? Are they doing like a Geek Squad type service? Which in the state's mind, if it's anything like a Geek Squad would do, it's taxable.
Right.
It doesn't matter where the person sits. They can be sitting in India. If they're repairing software that's sitting in Jersey, it's taxable.
Yeah.
So those are the kind of things that are in this that every one of our clients, including us, deal with because it's everybody's got software. So this is something to keep on. We should all be interested in this because a lot of our clients purchase software from out of state, and it's going to end up being a use tax issue. And it's going to come up on the audit, and as soon as these are published, every auditor is going to be looking for it.
Yeah.
The DOL.
Yes, I mean, that's right. And just to canvas one last thing, sorry, Neil. So please start thinking about topics you'd like to hear for the state tax interest group meetings as well. Next month is lined up to be New York State, New York City update. And then I was just hoping to get a sense for whether you think that you all could make a July or August meeting.
For DOL.
For DOL,
For
yeah.
DOL.
We're planning to have Department of Labor meeting.
One thing you were talking about is appeals. We've never had appeals. The other one we haven't had, in my memory, is wage and hour compliance, which is The reason I'm thinking about that now is what minimum wage has gone up. You know, because a lot of people use things, and those are just two topics I could, you know, there's some other topics we can talk about too.
If anybody has any suggestion for topics, or if they have any speakers that they think would be adding value to our group, please, you know, share them with us. And, you know, we'll probably do a couple of joint sessions again with the Fed group, because I think we got a lot of faces here with the combined groups, and I think that that's a good thing.
And I think, and just for the DOL topic, though, to help Steve and Margaret prepare. Marlene, I'm very sorry about that.
Do you want July or August?
Do you want July or August?
July.
We usually don't have a meeting in August, because there's a lot of people on vacation, and it's getting close to 9:15. So it tends to be a low head count.
I see a lot of nods.
So we were leaning towards July, if that's okay with everybody.
I think we'll shoot for July. And is there a preference? Are you all interested in hearing anything about DOL appeal procedures, or more stick to like the more traditional compliance end of DOL issues?
Well, I think there's probably a full load of DOL issues to cover at the top.
Well, I usually try to do different things each year, so we don't repeat for several years.
Okay. Well, we'll circulate.
Yeah, we'll
suggested topics, and
yeah. If anybody has any suggestions, please just email me.
All right.
Thank you.
Thanks, everybody.
Good job, John.
Okay. For those who may not know me in this audience, my name is Neil Courtney. I'm a tax partner with Cohn Resnick. I was based in Roseland the past 15 years, and last November I transferred to our Eatontown office.
Oh.
I still come here one day a week.
Yeah, that means you can't come back to work after a meeting.
I'm actually stopping my office, Roseland office, after we are done. In any event, I'm a past chair of the State Tax Committee from 1998 to 2000, and when I was the chair of that, in that role, I did what I still do now, 13 years later. I look at websites each morning generally. I print things out, some important, some comical. I throw them in a folder, and then a week, 10 days before this meeting, I go through them. I have some duplication maybe from different services. I decide certain things are not that important. Certain things I can put two items on one page. I put it all together. They used to print out copies, but in our growing green age, it's posted to the website. So all this material, and I know in the back I won't be able to see a lot of it. I'll talk about it. You can go on the society website. You can print out every page or whatever material I covered today that you feel is worthy of looking at in more detail.
Hang up. There we got a hammer?
IRS.
I muted it.
Mute's good. Oh, there you go.
All right. On the first two pages, I've got two items dealing with the City of Cleveland tax issue dealing with professional football players. The first one caught my eye. I mean, I'm a big sports fan. This was an offensive lineman, I believe, Hillenmayer. And it says a Chicago Bear football player's request for a refund of tax was properly denied by the Ohio Board of Tax Appeals. The taxpayer played football games in Cleveland for 3 years straight. That makes no sense to me, because if you're a Chicago Bears player, you would only play the Browns once every 4 years because you rotate conferences. So that's what caught my eye now. But then there was another case, which I'll get to, that has more significance. The bottom of the page, which you can't see yet until I scroll down, New Jersey announced that the heartbleed virus did not affect filing season. Of course,
That's the only thing.
Of course, the thing that Mark just talked about, which IRS also I'll touch on, had a similar issue. You know, I always explain to my clients with e-filing that our transmission of the tax return and your mailing a check are separate events. They marry them together. And I email clients when I see that the e-filing authorization is not coming back, because most clients, you know, even if you get a tax return to them in February, if they don't have K-1s, and they owe money, they tend to sit on the thing. You know, and I urge them, send back the authorizations, because the system gets very overloaded at the last day, and then you run into your, you know, spousal last name disconnects and your identity theft problems. But New Jersey didn't deposit the checks fast enough, and thus they sent out a slew of notices. I called when I had 3 clients notifying me in a 24-hour period. I knew it was widespread. I got through to Trenton. I spoke to someone. I called Linda Eagleton's office. She's assistant director for compliance. I got one of her people, and they said, we don't think it's a widespread problem. I knew it was a widespread problem. And several people in my firm got notified where the client mailed in their check with a 1040V voucher. The check cleared, and yet they got the notice because they didn't post it fast enough. The same thing happened with IRS with 1041s. In the last week in April, we got a slew of notices, all dated May 5th. The IRS post-dates notices, I'm told, so that you can't argue, well, you didn't give me 15 days to respond. So we got all these notices dated May 5th. On April 29th and April 28th, that bill, the 1041 file, was for tax plus interest plus penalty because they didn't get credit for the balance due checks. I called IRS. IRS said they will send out corrected letters. New Jersey said, we're not sending out corrected letters. We're just going to fix it. And as the gentleman in the back before said, if you go on the online payment lookup, you can see that the payment got posted as of April 15th, effectively signifying that the matter's been resolved, but you get no written proof. So that is that. So now we had a second situation with City of Cleveland. Jeff Saturday, for you football fans, he was the center for Peyton Manning for Indianapolis many years. I think he finished his career 1 year with Green Bay. Now he's an ESPN analyst, number 63. He argued that how can you tax me when the one game that the Colts played in Cleveland, I was injured and I didn't even make the trip. And they said, too bad. City of Cleveland imposed a second paragraph of income tax on all qualifying wages earned or received by non-residents for work done or services performed or rendered within or attributable to Cleveland and uses the games played method. The city determined that the taxpayer's absence from the game was treated as a sick day and was therefore taxed.
That's where the insult is.
So they didn't cut a break for the athlete. The athletes generally do well in the murder cases, the rape cases, i.e. O.J. Simpson, Kobe Bryant. But in the tax cases, they may have as much of a chance as our regular clients of prevailing. Okay. New York Governor Cuomo has announced the launch of a new and streamlined online filing system to form domestic business corps and domestic LLCs. Businesses can now file their certificates of incorporation, articles of organization electronically. And the new system allows these two business filings, which previously could take more than a week, to be processed within minutes. Okay. Bottom of that page. Under recently enacted New York legislation affecting the corporate franchise and personal income taxes, a new tax law section provides that if a taxpayer stands convicted or is a shareholder of an S corp or partner in a partnership that is convicted of certain penal law offenses concerning corruption, bribery, and misconduct, then the taxpayer will not be eligible for any tax credit allowed under corporate franchise tax or any business tax credit allowed under personal income tax. The provision applies to acts committed on or after April 30th. So someone must have gotten a big tax credit and had committed, corruption, bribery. They figured, well, we better close that loophole. A lot of these things are often reactionary. Okay, online sales tax, the Marketplace Fairness Act. This has been talked about for years. A U.S. House Judiciary Committee aide has confirmed the committee will hold a hearing in March. However, the hearing will not deal with any specific legislation. The bottom of this page, the MFA would authorize states to enforce sales and local use tax laws as long as they simplify sales and use tax administration and collection and include an exemption for remote sellers that makes less than $1 million a year nationwide as far as their sales. Whether this will ever happen during our lifetime, I don't know. It's got to be at least 5 years that this has been talked about. Oregon may end use of private collection agencies to go after back taxes, and I read recently that in the federal extenders legislation, I believe in the Senate, they're trying to stick in provision to authorize private collectors, which IRS used for a very short period, and that's getting a lot of flack. Third paragraph here, there seems to be a mindset among many legislators and public service advocates that collecting on uncollected taxes is the lowest hanging fruit when it comes to raising revenue. Next page, an aide told tax analysts that the senator had received a number of complaints from constituents regarding debt collection practices by the DOR. This is Oregon again. the Department of Revenue concluded its own double-blind study, never heard of a double-blind study, released in February 2011, which found that private collection firms had a much lower success rate, between 8 and 10%, than in-house DOR staff, 20% on new debt cases. I don't know about you folks, but I've had my share of aggravation with Pioneer Credit Recovery. Okay, I mean they're
line.
What? Yeah, I mean at times they're just awful, especially when, well, I'm being kind, especially when the matter never starts with the division. You know, the first notice the client gets is that scheduled liabilities from PCR, and now you're going backwards. And then, of course, they, you know, to add insult to injury, they tack on their 10% cost of recovery fee.
And Neil, under the Expired Act that's in there right now,
Yeah.
it does say that the IRS can enter into qualified tax collection contract.
Well, I read this week that the Senate, because the Senate and House, of course, have different bills, which, you know, there's talk of making the R&D credit permanent, but what's going to pay for that? This is supposed to be a revenue neutral measure. I mean, and this, my guess is nothing will get done until after the election. And then the lame duck session after the election in November will, you know, then we'll get retroactive Section 179 expense and bonus depreciation and the sales tax deduction for those who live in states like Florida with no state income tax. And, you know, it's obviously very difficult to practice when you don't know what the rules are today and things are changing retroactively. Arizona House Republicans, this was interesting to me, are pursuing plans to offset revenue gains from future passage of the Federal Marketplace Fairness Act with a state income tax cut. Their House Bill 2465 would take effect only if Congress passes MFA or a similar bill to allow states to require remote sales to collect sales and use tax. It would require the Arizona DOR to identify the amount of sales and use tax collected from remote retailers and then cut individual income tax rates by a corresponding amount. The tax cuts would be split among the tax brackets according to how much revenue each bracket produced, so the higher brackets would receive a larger tax cut. A representative, Ruben Gallego, says, I disagree fundamentally with this idea that collecting internet sales tax is a sales tax increase. There's always that argument. Or you're just collecting what you rightfully were entitled to, and thus it's not a tax increase. Next. You've been hearing the radio ads or for the New Jersey online gambling that's legal, as long as you're a New Jersey resident and over age 21. You know, they were counting on about $180 million, and you haven't heard those? $180 million in revenue, and at least back in February, the revenue from this has not been anywhere near what they were forecasting. Of course, we know the state has a bigger revenue issue of late, which I'll get to at the very end. So they originally budgeted $180 million, then they reduced it to $160 million, and this started, say when it started? I forget when it started. Oh yeah, it's in here. Launched on November 21st, 2013. Through mid-February, they only collected $2.7 million. And at that rate, it says it would barely cover the decrease in revenue from the loss of Atlantic City casino traffic. So, of course, then Ray Lesniak, one of the governor's frequent critics, offered one way to pay for an income tax cut, because the governor was still pushing for that, and I don't think anymore, suggesting the governor balance it out with the millionaire tax, and I, dear Christie, are staunchly opposed. Okay, next. The Gayed decision, G-A-I-E-D, this is a sort of landmark case with New York residency audits. This was a case where the taxpayer owned a house in Staten Island. His elderly parents who had medical issues lived there. He would occasionally stop off there, sleep on the floor. He didn't have his own room. He didn't have his own furniture, even though he owned the house. He'd go there to give them medication. And, of course, he worked in New York, so he was in New York more than 183 days. So they said that you're a statutory resident. And the New York Tax Appeals Tribunal reversed, or the New York's highest court reversed the Tax Appeals Tribunal and said that, no, this is not a resident. So this was a pro-taxpayer case, which you don't see often. From 2001 to 2003, they were looking for $253,000 from him. Quote, there's no requirement for the petitioner to actually dwell in the abode, but simply that he maintain it, the tribunal said. Finding that Gayed's resident status was determined correctly, this was the lower court, because he spent more than 183 days in New York City and maintained a permanent place of abode. Last paragraph, notably, nowhere in the statute does it provide anything other than the permanent place of abode must relate to the taxpayer, the ruling said. The legislative history of the statute to prevent tax evasion by New York residents, as well as the regs, support the view that in order for taxpayer to maintain the permanent place of abode, the taxpayer must himself have a residential interest in the property. So the taxpayer won on this. Next 2 pages are sort of amnesty, narrow amnesty programs that New Jersey just instituted that ran only through May 15th. I don't know if yesterday they talked about that at all. I suggested you put on the agenda as far as statistics. Maybe too soon because it only ran through last Thursday.
Yeah.
But they had one here for partnership tax and partner fees initiative, and then they had another one which is on the next page. This was on their website for the intangible asset nexus situation. They both ran from March 15th to May 15th. I was at a meeting that Director Brian spoke at on Friday, May 2nd, NJCPA Tax Committee. He said that these programs typically they get 90% of the activity, the filings in the last week. So he said it had been pretty slow up until then.
Yeah, the intangible asset one I think was, I guess, a relative success.
He didn't have the stats yet.
He didn't have the stats, but
they said it had a lot of
there's participation. The other one, not so much.
Neil, one thing I spoke with Director Brian right after the meeting, and because we had a couple of clients that we discovered after May 15th. Because I said it's kind of
right. He
says he gave I think got the whole name. You can contact him. It's not set in stone. It's May 15th.
Nick Salamando, maybe.
Well, Salamando's the one listed on this one. The for the partnerships, it's listed as Bill Bittner.
Yeah, that's what it is. Yeah.
As your contact.
Bittner.
Okay. Next, the New York Times article. Colorado expects to reap tax bonanza from legal marijuana sales. For time constraint, I won't go through this, but they're talking about, $100 million a year in revenues. Of course, the banking industry hasn't been all that cooperative from what I've heard in news reports that it talks about in this article that they're hiring security people to take them with all their cash, the sellers now, the dispensaries, to deposit their cash because they can't use normal banking channels because of some
Imagine what it could do for Jersey.
Demographic of the clientele.
So.
No, because they get stoned.
I think personally, in maybe 10 years, we're going to see marijuana legal across the country. We're going to see same-sex marriage in every state. I heard in the news yesterday, Oregon just approved it yesterday in the courts. So you can read that in your leisure. The Multi-State Worker Tax Fairness Act introduced in the U.S. House. A Connecticut congressman has introduced this to ensure workers are not taxed twice on the same income. This stems from, I'm sure, the Zelinsky case, which was the Cardozo law professor who lived in Connecticut, spent a couple days a week in the school in New York, did lesson plans and other things, graded exams at his home in Connecticut. New York, of course, taxed him on all those days, saying that he worked at home for his convenience. Connecticut said, we're not giving you a credit for those days that New York picked up because you were physically in Connecticut. So he ended up, in effect, getting double taxed. And it specifically talks about in here, on the second page, that many Connecticut residents who work for New York employers and sometimes telecommute must pay taxes to both states on the wages they earn. Okay, at a prior meeting, I had shared with the group the New York State program that sought to suspend the driver's licenses of those who owed more than $10,000 in personal income tax. Well, they put out a press release in March that it was rather successful. Licenses of nearly 9,000 tax evaders were suspended, and they ended up collecting $56 million from those folks, exceeding projections by 34%. Partial days constituted days spent in the state. This was a case where a taxpayer argued that he was not in New York for 24-hour consecutive periods, and he disagreed with the definition that New York used as to a day. We know that a day, if you're in New York for 5 minutes, that's a day in New York. Other than if you're just traveling through, say, you wake up in New Jersey, take a car service to Kennedy Airport, board a plane, and fly to Chicago for a business meeting, that's not a day in New York. But if you go into New York, if anyone's leaving here today and going into New York, whether you're going to tonight's Mets game at Citi Field, a Broadway show, to meet a client, to meet your grown child for dinner, that's a day in New York, even though you might be only there for 2 hours. So this taxpayer argued the definition of calendar day and lost it. Next, personal income tax, no credit allowed for taxes paid to Connecticut on intangible income. This was a resident credit case, and again, for time constraint, I'll let you read it on your own time. New Jersey unlikely to proceed with market-based sourcing this year, which you may have been discussed at your meeting yesterday. They're just taking forever to deal with this issue as far as CPT sourcing, so we'll go through that. Next, I'm in the home stretch. New York Tax Appeals Tribunal upheld an ALJ determination that a portion of the income received from the exercise of a non-resident stock option received from the former employer was allocable to New York and subject to New York personal income tax, even though the gain from the stock option was attributable to the period after he had retired from his job. So you got to be careful with that. When you get those options awarded, it pertains to past New York employment, and they're going to look for future New York tax. New York state budget. New York's one of the few states that doesn't use a June 30 fiscal year. They use a March 31. And in recent years, they've actually gotten their budget adopted at the very last minute, whereas for many years it was something that happened typically in May or June. Two things I'll just point out that affect our clients. The second item on this list here, reduction of the corporate franchise tax from 7.1 to 6.5, effective 1/1/16. And the middle of the page, I'll scroll to the top here. Reduction of the income tax rate for all manufacturers from the current 5.9 to 0 in 2014 and thereafter. New York's really making a push to encourage. You see all these commercials for these companies that are moving to New York, and with Robert De Niro as the narrator in the background, and there still is a big article in the newspaper over the weekend about Bergen County and Rockland County going after each other's businesses to have them relocate. Talked about identity theft before. April 8th, the Treasury Department put out a press release that there are schemes going on and talking about efforts being made to combat identity theft. Director Bryan is quoted, we get a lot of false returns. We stop millions of dollars from going to the wrong people. We refer some of them to the Criminal Investigations Unit, which evaluates them based on the information we have. Delaware has raised its franchise taxes and its fees on partnerships and LLCs, and they're listed at the bottom there. $75 is now $175, and they're not anything astronomical, but since some of it, I mean, we all have corporations that are incorporated in Delaware, although they do those filings online. I think they largely do them without our involvement. Next. Removing Amazon.com sales tax advantage decreased sales for the online retailer by 9.5%, but the beneficiaries of removing the tax advantage were largely other online retailers. A study of buying habits of thousands of households revealed based on research done by Ohio State University. So when Amazon starts charging, apparently people say, I'm not going to buy from Amazon anymore, and I'll go look for some other online seller that doesn't charge me sales tax. So I mean, I think most people felt that people don't buy from Amazon to save sales tax. They buy because they like that they don't have to go to a mall, and they don't have to deal with parking and traffic, and they like what they offer. But apparently, according to the study, sales tax is a factor. They get into all the details on the study, which I won't go through, and who the researchers were. They looked at transaction data for 1.4 million households, focusing on 5 states, California, New Jersey, Pennsylvania, Texas, and Virginia, that began collecting sales tax on Amazon purchases in 12 and 13. In the big ticket items, they found an even steeper drop in larger purchases. Amazon customers' purchases of over $300 fell by 23.8% after states began collecting the sales tax. I mean, I can see if you're buying a $20 book, do you really care if you get charged $1.40 of New Jersey sales tax? But if you're buying a flat screen TV or some other large ticket item, and now you're getting charged a sales tax, you might think twice before you place that order. Okay. Almost at the end. Okay, New Jersey taxpayers e-filing at a record pace. State received 3.3 million returns electronically, up 6.5% compared with 3.1 million during the same period in 2012. Paper filings were down by a corresponding 200,000 returns, so that makes sense. 83% of New Jersey taxpayers through April 16th filed electronically this year, up from 75% a year ago. And finally, I'm sure most of you, if not all of you, are aware of the media reports that have come out recently announcing the $807 million budget shortfall that New Jersey is facing, which contrary to what Jim said before about clients questioning, why is my tax so much higher this year? I mean, in my office, we had many clients who did exactly what New Jersey, which I'm flabbergasted that they didn't plan for this. Many clients in late 2012 generated significant capital gains because A, everyone knew the 5%, the 3.8% tax was coming because that was legislated in 2010 as part of Obamacare. And most people were guessing that the fiscal cliff legislation was going to raise capital gains rates from 15 to 20. So there was this big sell-off by a lot of taxpayers in late 2012, and thus the states were flush with revenue in April of 13, or even maybe in late 12 if you didn't have AMT and it was beneficial to prepay, but for those, when you have those large capital gains, often you're in AMT. So April of 13, the states were swimming in dough, and they didn't realize that this was a one-time phenomenon and it was going to reverse in the other direction. And it's not just New Jersey, because this article talks about, and I've seen other articles now, that Connecticut is short in this $330 million. Okay, well, it's a smaller state, it's have a smaller budget. Some interesting statistics in here. Well, they say of the $807 million, $700 million, or 85% is attributable to GIT. In recent years, just 400 taxpayers have accounted for almost 10% of GIT. The top 1% paid 40%. The top 10% paid 70%. So it's so those taxpayers who, you know, your average working stiff making a steady $50,000 a year, their tax didn't change from one year to the next. But those who control their income through capital gains had higher incomes in 12. And thus lower incomes in 13, and they just realized now when they got done depositing the April 2014 collections, ooh, yeah, a lot less money this year. Hello, I mean, I don't know what was going on in all these states. I mean, I could have told them that this was going to happen. I mean, in my practice, in my office, we had many clients who didn't have protective estimates for 2013 because we knew 2012 was a spike upward in their tax, federal as well as state. Thus, we weren't going to have them pay on a protective basis. Granted, we did have some clients, especially your high wage earners, your partners in law firms and medical practices, where their earned income was steady, and thus they got hit with the 0.9%, the hike from 35 to 39.6, and in those cases, yeah, the tax went up. But those with the multi-million-dollar portfolios, in many cases, the tax went up in 12 and down in 13 because their income went down in 13. Yesterday, I read. The governor said, how are we going to make up this shortfall, which they have to balance the budget by law by June 30th? We're going to cut back on the pension contributions. And I read today that the NJCPA is going to file a lawsuit against Christie. So, you know, it should be an interesting, I mean, Bridgegate may be behind him, but this is going to be a big problem for the governor as June 30th approaches on how this state budget gets balanced. And that concludes my remarks. If anyone ever has anything, occasionally someone will email me something and I'll add it to these handouts. You know, I don't read every newspaper. I only have one set of eyes. So if you see something that you think is interesting, shoot it to me and I'll include it in a future handout. And I will acknowledge you.
And everybody, just one last thing. As John Patrick so towards his chair, I think we just all owe him a very big thank you.
And everyone, it's Jimbo's birthday today, so.
Oh.
Yeah.
Happy birthday.
39?
Yeah.
One short of 50.
Oh.
I'm 40.
He's 14.
One year after his bar mitzvah.